Welcome back, everyone, to the Black Brain Trust. This is episode 132. I'm here with my co-facilitator, Lionel.
Hello, everyone. How you all doing today? How you doing today, Mike?
I'm good, brother. Yourself?
I am well.
Okay. Those of you who want to follow along, the docket is in the description beneath the video. As a point of reference, we are not certified financial planners. If you want a certified financial planner, please go to cfp.net and look up one in your zip code or the area that you live in, and we will get started. All right, so first article from theguardian.com. Santander to close 140 branches, putting more than 1,200 jobs at risk. Santander plans to close nearly 1 in 5 of its bank branches in the UK, putting more than 1,200 jobs at risk. The Spanish-owned bank, which has one of the largest high street networks in Britain, will shut 140 branches, leaving 614 after the closures, which will be completed by the end of the year. Santander said it expected to find new jobs for about a third of 1,270 employees whose jobs are at risk. The British banking industry is undergoing rapid changes as more and more customers bank online through websites and mobile apps, reducing the number of visitors to branches on the high street. Santander said branch transaction numbers have fallen by 23% over the past 3 years, while transactions via digital channels almost doubled over the same period, as well as relocation to other nearby branches. Some staff may be able to find roles at call centers and large central offices, such as those in Glasgow and Milton Keynes. While the branch closures are spread throughout the UK, it is thought that employees in more remote branches in Wales, where relocation may not be a viable option, will be most exposed to redundancy. This is just a chart in the middle. Half of all high street bank branches closed between 2007 and January 2019. Cooperative Bank, HSBC, Clydesdale, Yorkshire, Santander, RBS, Royal Bank of Scotland, Lloyds Banking Group, Barclays, and Nationwide Building Society. So if you look at the numbers, you can see that most of them have closed at least 1/3 of their branches due to due to, as we just read, that digital apps, mobile banking has basically put these physical brick and mortar institutions out of business for the most part. I know. You have anything you want to add to this?
It's unfortunate that a lot of people are losing their jobs, especially to this number. Um, like you said, Santander is a large banking institution that even have branches where you're at. Um, Now, in the article they did mention how, per the numbers, they saw that the numbers of people coming into banks have been dwindling. Um, I, I I would even say that it's been dwindling for a very long time, and they may be hemorrhaging money. They maybe have been hemorrhaging money at that standpoint for a while because, as for me, I know and others, they have not needed to walk into a physical bank for a very long time. And also, the article pointed out apps have contributed to that also. They're doing this to save money. They're losing money. There's no need to keep all these tellers and other people on when people are not even there to service them. So it's unfortunate that people are losing their jobs, but it is what it is.
Yeah. Is that me giving feedback or you?
I'm you.
Yeah. This was bound to happen. A lot of people did not take into consideration what we have been talking about, and even Black Narcissist Speaks have been talking about this. Automation is coming. It's replacing jobs. You see how many branches have been closed just for Barclays and the the other multinational banks. You're talking at least one third of their banks are gone, of their brick and mortars are gone because mobile banking, even now cryptocurrencies. You can probably throw cryptocurrencies into all of this. Um, if I'm crypto mining, or if I own masternodes and I'm getting dividends or something like that, I really don't need to go into a bank. What do I need to go into a bank for if I can do everything online or from my mobile phone or from my smartwatch? What's the point? The only time I think the last time I've been in the bank was about 6 months ago because I lost my card and I needed to get cash out of the ATM at the branch and to fill out a application. But outside of that, I really don't go into brick and mortar branches. There's really no reason for me to go there. I take a picture of my paycheck if I or whatever check I get. Um, I scan it to my phone and goes into the mobile banking app and it deposits.
Yeah, me, and this is not. I'm not saying this to be a joke, but for a fact, the last time I've been to a brick and mortar bank was at least 2006,
Hmm.
and that's serious talk.
I think this is like a perfect time for like Black people to really start getting into the banking sector because everything's digital now. So you don't need to open up this big, large bank with all these safes and money, and you have to train your tellers and you have to follow all these banking codes, with security guards and all this other stuff. You don't really need to do that anymore. You can do all this stuff in cyberspace through Amazon Web Services or Azure or some other um, cloud computing company, and leverage that digital infrastructure, and you can set up a bank immediately.
Yeah, the entry cost is has gotten extremely low now in this field.
Hmm. Yeah, man, tomorrow in the chat says banks are a far gone concept. My credit union can make my card in the credit union. And now I think we read an article a little while back where I think there was a patent in place for using your smartphone to an ATM and being able to receive cash in case you don't have your card, using like a QR code or something like that, or some kind of four-digit PIN.
I that's a good idea because just trying trying to compare it with Tesla, that's what Tesla do with their app. If you have a Tesla, you can use your phone to go into the car, well, to get into the car, lock it, and drive it as a key. So that's not a that's what you just said is not out of the ordinary.
Hmm. Yeah, I can't stress enough, man. I mean, I bank Black as well. One United is my bank. Um, you can look them up. I actually dropped the link in the chat. But yeah, I think that this is the perfect time for Black people to start their own banking infrastructure. I mean, you wouldn't even need it anymore in terms of real estate. You don't need Brinks trucks and all that stuff anymore. Hey, what's going on, Ryo? What's going on, Paul Bryant? All right, let's get to the next article. All right, next article is from MarketWatch.com. MasterCard is fined $650 million by the European Union. The European Union fined MasterCard Incorporated $648.2 million over charges it artificially raised the cost of card payments, including inside the bloc, continuing a European crackdown on U.S. credit card companies over fees. The European Commission, the bloc's top antitrust regulator, said Tuesday that MasterCard had historically prevented retailers from shopping around for lower bank fees available outside of their home country. It said this led to higher prices for both retailers and consumers and limited cross-border competition. Credit card firms charge so-called quote interchange fees to retailers banks whenever a customer uses a credit or debit card for a payment in a shop or online. These fees used to vary from country to country within the EU. MasterCard flagged last month that it expected $650 billion fine, and on Tuesday said the closure of the long-running chapter represents quote an important milestone for the company. The firm was given a 10% fine reduction after it cooperated with the probe and acknowledged infringements of EU competition rules. MasterCard said in December that it expected to book the charge in its fourth quarter results and probably pass it on to its customers, right? Yeah, I always
Yeah,
found this interesting that they tack on these ridiculous fees on these credit cards where if you miss one payment or you make some kind of transaction in this place, you can end up paying like $130 a year or something like that in exuberant charges, considering how wide their network is of constituents. Up to 2 billion people. That they make a pretty good penny off of this.
yeah, they do. And like we've always said, when companies have to pay fines or more recently these tariffs, they pass that on to the customer. They're not going to pay that. They're in the business of making money. So with Mastercard, and well, we've known that they charge retailers to use their card. Basically, if I want to pay with a Mastercard, then that retailer has to pay a fee because I use that card, and that's not including other fees. So it's like they kill you slowly with these fees, and it's ridiculous. It's like, wow, fee for this, fee for that, and once you don't pay that late charge, that you get charged a couple dollars. But yeah, they are making a lot of money off fees, a lot of money.
Hmm. Yeah, it's a debt-based economy. So in order for you to participate, you have to take on some form of debt, either through exuberant fees or taxes or student loans or toxic mortgages. They're finding a way to dump debt into your lap and make you hold on to it for a very long period of time.
Yeah, it. I think Obama passed a law. I forgot what the law was, where credit cards had to, in your bill, say if you pay the minimum balance, this is how long it'll take you to pay it off. But with that minimum balance, I think that that calculation with that minimum balance, with the fees taken off of, you 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 easily pay two, three times at least what you owe because of those fees.
Hmm. And before you know it, there's a credit score that basically, it can either destroy you or it can make you better, in terms of how you live.
Yeah. Now your credit reporter will recognize that you've been paying your bills on time, but in reality, you should have been paid the bill off already. That's the ironic. That's the irony of it.
Mhm.
But yeah, these this 650 million fee, they'll pay that, but they'll find a way. They'll find a way to
They'll
recoup
just
it.
they'll pass it on to the customer, to the end user. That's all.
Yeah, yeah.
They'll nickel and dime you. All right, this one is from 9to5Mac.com. Apple dismisses over 200 staff members from autonomous vehicle department. A report from CNBC this morning says Apple has cut over 200 employees from its top secret, quote, Project Titan autonomous vehicle program. In a statement, however, the company says it sees a huge opportunity in the space. An Apple spokesperson acknowledged the charges, but it attributed them to staff restructuring rather than layoffs. News of Apple layoffs shouldn't come as a complete surprise, as just days ago we reported on hiring reductions being planned by the company. Meanwhile, CEO Tim Cook was quick to defend the news by reassuring investors a division's importance to Apple isn't measured by hiring rates. Besides division layoffs, Apple is also saying select staff has been moved to other sections within the company, such as machine learning. The statement from Apple spokesperson via CNBC follows. We have an incredibly talented team working on autonomous systems and associated technologies at Apple. At, as the team focuses their work on several key areas for 2019, some groups are being moved to projects in other parts of the company where they will support machine learning and other initiatives across all of Apple. We continue to believe that we continue to believe there is a huge opportunity with autonomous systems, that Apple has unique capabilities to contribute, and that this is the most ambitious machine learning project ever. The report makes reminder of previous cuts from Apple in the division back in 2016, as the company has remained continually silent on the project in recent months. Further, Cook has been more than prominent in toting health-related features as number one priority for Apple, going so far to say it will be the company's greatest contribution to mankind. Conversely, hiring rates within Apple for health-related careers has increased 400% over the past 2 years. How do you feel about these layoffs within self-driving car division? Let us know. Okay. So what I'm seeing here is at some point Apple had some grandiose idea that they were going to get into autonomous vehicles, um, and that's not really going to happen. And what's starting to happen now is that they see the healthcare market as something that's a vertical leap for them in terms of business, and there have been cases where Apple smartwatch with the heart rate reader has proven to be vital in terms of collecting data, health data, and presenting it to doctors. And doctors have been actually using this data as synthetic analysis for how their patients are doing throughout their day, because you can log into the Apple the app, and you can download the metrics that you generated over the past hours or days and so on and so forth. I think there was one case where a person was having like either a cardiac arrest or some form of diabetic shock or something like that, and the heart rate sensor actually picked all this information up, and it collected all this data, and actually helped the hospital or the doctor itself to kind of get an idea of what happened at that moment. So the Apple Watch is actually somewhat competing with um, uh, what do you call that? What do you call that when you put it in somebody's chest? A
Defibrillator.
no, not a defibrillator.
Oh,
A
pacemaker.
Yeah, pacemaker. Thank you. So it's actually competing with that. So if they have competing technologies in that field, they're pushing their weight against Philips, GE, um, Fresenius, many of these other Siemens. There's many other companies that are involved in the healthcare space and the wearables and other items that Apple thinks they can compete with, and they probably could because they're coming from the outside with a lot more resources to throw at this part of the market. And according to the article, 400% increase in health related jobs posted on Apple has been in hiring. So we're seeing all of this.
Yeah, yeah, I agree with you. And with the Apple Watch detecting abnormalities, because those are actual documented cases. Um, they even made a commercial where people talked about how the Apple Watch saved their life. Um, I've heard about Apple's secret Titan division years ago, and they were trying to get into the autonomous vehicle sector before a lot of talk about autonomous vehicles, and it seemed like a logical way, a logical avenue for Apple to, at the time. It seemed like a logical avenue for Apple to go to because of their reputation of reinventing spaces. The autonomous at that time, the autonomous vehicle space wasn't as talked about or on track as it is now. But now, since so many people are in it and are perceivably ahead of Apple, we haven't heard anything about Apple and autonomous vehicles. So now they are cutting these people. It seems like that they're going in a different direction than what the crowd is going into. The crowd is going into autonomous vehicles right now because that's part of the fourth industrial revolution. But it seems like they're going somewhere else, such as like the article talked about health, and it's like they're doubling down on what they are good at in terms of the Apple Watch. That's what the article is saying to me.
Hmm. Yeah, Apple. Again, they haven't really invented anything. I understand that they were working on an autonomous vehicle at some point. The problem is, this is not the right time. It was probably never going to be the right time for Apple at all, unless they did it, 10 to 15 years ago. If they were the first ones to come out with a Tesla before Tesla was Tesla, then that would be different. But as it stands right now, um, it sounds to me that they were working on a driver stack rather than a whole entire vehicle. So basically, you can actually buy a autonomous vehicle and then add the Apple driving stack from your phone or from your watch or wherever it was coming from, maybe the Apple Cloud, and the car would drive itself. It, there's a few ways you can go about this, but it seems that Apple was just too late to the game. Um, I don't see Apple. I don't see how they're going to restructure this. They say they put them in different divisions. I mean, machine learning is applicable across the whole entire gamut. So it's not like, oh well, we took those guys from off the Project Titan and we put them on the machine learning team. Well, there was already a machine learning team on Project Titan, so what are you talking about?
Yeah, we'll see. We talked about Apple ad nauseum in the past month. Um, some of their moves don't sound good. It's their head scratchers,
Hmm.
starting with when they said they're not going to report any more of their sales figures.
Hmm.
Um, and we are waiting to see what avenues Apple's going to go to. It seems like this is one avenue they're going to go to. It's good, but not great compared to what everyone else is doing, especially Microsoft. Um, yeah, but we'll see.
Yeah, I mean they say it was staff restructuring, but Apple never announces any major layoffs, right? Because that means that the company's doing bad if there's a layoff. So they're never going to mention it as a we fired this many people. No, well, oh no, we were restructuring. Yeah, you have to relabel it restructuring or involuntary separation because you don't want to look bad in the media because you're already not doing the numbers that you should be doing according to the technical analysis.
Yeah, yeah.
All right, let me get to this next article. Okay, this one is from 95 Mac again. Sale of Apple's Michigan Avenue flagship store will mark one of Chicago's most expensive retail real estate deals. Since opening since opening in October 2017, Apple Michigan Ave on the Chicago River has become a must-see destination of Apple fans, architectural enthusiasts, and creative professionals. The Foster Plus Partners Design Store draws visitors from magnificent mile shopping corridor, offering stunning views of the river and a glass-wrapped performance space like no other. The site's popularity and visibility have now earned it a pricey real estate deal. Crane Chicago Business reports that property owner Walton Street Capital has agreed to sell to the flagship store to investment firm Invesco for roughly $79 million. Dollars. According to the report, the transaction would be the fifth most expensive retail real estate deal that Chicago has ever seen. Last March, the Wall Street Journal learned that the property had been put up for sale by Walton Street. Apple's 15-year lease currently stipulates $2.5 million annual rent, with rates increasing 10% every 5 years. While Walton Street Capital originally purchased the store in a deal that included the 35-story office building next door at 401 North Michigan Avenue. Apple Space has been split from other assets for the sale to Invesco in hopes of greater long-term return. Just a few months just a few months after the building was listed for sale, Apple Michigan Avenue won an IALD award for innovative lighting design. So, what do you think about this, Lionel? Your neck of the woods.
Okay. We mentioned how the stores that okay, I'm glad Dollar Will joined in, but I want his opinion on this. But quickly, I'll say we've mentioned how Apple stores are pretty proprietary. They're encased in glass. They have an upstairs, downstairs. In some cases, I think it's the New York one where the upstairs is just glass. You have to go downstairs underground. But those are not regular brick and mortar stores. They are really proprietary, and it's hard to sell if someone. It's hard to sell in terms of um, leasing it out to someone else. Um, Now that I've seen this, I just so happen to catch this on the news, Chicago news, that these stores are obviously assets, and when they are obviously going into uh, financial times, that they're laying off people like we said in the previous article, and they're starting to sell some of their store locations for $79 million. I don't know if that's with or without extra fees and so forth. So this is telling to me, and that it says that Apple is going through um, financial more financial woes that they are saying themselves.
Hello, gentlemen.
Hey, what's going on, brother?
Yeah, how you doing?
I'm
Doing that
I'm
well.
sorry. I missed this last story that you were just talking about. Are you saying that Apple is closing stores?
Yes.
Didn't we just didn't we just project that that was a possibility like a week or two ago?
Yeah,
Yes.
they would have to get out of the retail space. They would have to reconsolidate a lot of their brick and mortar assets. We talked about before how proprietary the store design is and how it only accommodates Apple's vision, right? If you were a Dollar Will trying to open up a Dollar Tree store, you couldn't open it up in that glass encasement of what's considered to be a store. That's so proprietary to Apple's design. It's like who else would want to get in there other than like a private museum, right?
Right.
It's very difficult to repurpose that space.
Uh okay. I guess what I was looking at, I'm not disputing that. I mean, but I'll say this: if the economy was in a different, it was in a growth phase, they wouldn't be closed. They wouldn't be getting rid of the stores. So I guess I'm interested. I'm intrigued by this because we were, everybody, knows I'm on the side that this economy is slowing down. Don't believe the hype. And when we talked about it a couple of weeks ago, um, that's what I was basically saying. When companies, there's a playbook that companies use when they're trying to get smaller, when they're trying to prepare for tough times ahead, and getting rid of the stores, getting thin, cutting back in experimental projects like the car that actually nobody knew about it. It was a rumor that the Apple was, getting into the car business or whatever. But
No,
that's
I think somebody spilled the beans before and they got arrested for it. They used to work at Apple or um, was contracting with Apple. They had spilled the beans before about it, so it was kind of known.
Wow. Yeah, but that's what happens. All of that experimental activity, companies they wind that down, they pull back on that, they basically cut the fat, you know. And so when Apple was the largest market cap company on the stock market by market cap, meaning it was more money invested in Apple than any other stock in America, including Exxon. So for a period, Apple was number one in America. So when the most attractive company starts to slow down their production line, that's your indication of what's going on in the economy, because nobody's trying not to make money or trying to make less money. And so, if you really thought that you could sell more items, you would be taking out loans and building as many widgets as you could. But when you just look at the behavior of Apple, that's telling you that the economy is not growing at an optimistic pace. And we theorized this a couple of weeks ago. So you're going to see more of it because, I mean, Apple's loaded with money. Apple's going to be all right. Apple's not going anywhere. They have enough money to ride it out.
Well, that really depends on what happens with these court cases that are coming up. So they can really get a torpedo hit by some of these courts for some of these patent violations. So
Yeah, but you know what? Back in the '90s, everybody and their mama was suing Microsoft. Same kind of thing. And these corporations have a way of working it out. It's like I steal your idea, and then I go and I create a market, make a whole lot of money for it. Okay, I cut you a deal, I cut you some money, and then we just make a little business deal where I can continue to use the thing because it's really in the sense, it's like the ultimate flattery to have Apple steal your product. Because if you can sue, you can end up one winning the suit, and two, you in a business deal will more than likely come out of it. A proper business deal will come out of it. So Apple, just like Microsoft weathered the storm, Apple will too. But it's those smaller companies, those subcontractors to Apple. That's gonna be rough for them.
I know you had anything you want to add?
Um, if they're closing one store, obviously they're going to close another store. I don't know specifically where all the stores are at,
Probably
but
China.
huh?
Probably in Europe.
Yeah, yeah. I was going to say, they would close the stores that they get the most money from, and that would be if they have if they have a store in New York, whatever lucrative stores they have in Europe, they're going to close the stores that they can get the most money from. If they're going to close any other stores,
Not
other
necess-
nations.
Not necessarily. So Apple sees their stores as like embassies. So in order to engage that in order to gauge that audience, because when people go to the Apple store to get that Apple experience, right? They're gonna keep New York, they're gonna keep LA, they're gonna keep Miami. These are these money making markets. Despite the fact that they have to pay exuberant rent prices, like we saw in the article, they're paying $2.5 million in rent just for that one store. They have over 120 stores around the world. If you're paying $2.5 million in rent per year, you're talking about $208,000 a month, just for rent. Are you really turning those numbers like that? Somebody has to be looking at the technical analysis and saying, "Whoa, we're spending way more on rent than in certain markets that are not having a return on investment. Why are we doing this?" Dollar.
I would push that kind of analysis over to the fundamental side. I would say that's more in the purview of fundamental. But I agree with you. I was looking at the article that you put up, and they said in the article the Apple was able to basically they say Apple was able to create the appearance of revenue growth only by raising the price of the iPhone.
Wow.
So so the demand for the iPhone is so hot that they could like goose the price up on and because they're no longer breaking out the sales of the individual products, you don't really get to see that maybe the other products like the iPad and the watch and the desktop, you don't get to see if those products are carrying their weight.
Right.
So
And the thing about the watch is that you need the phone to go with it. So you had to already have an iPhone already.
wow. So yeah, and so now it's like I think Mike, you talked about this at a previous time, an article referenced it too. It said in the article, it said like 12 years ago, there's a much smaller number of people that had uh, cell phones and iPhones, cell phones in general, and iPhones in particular. And so they reached a point where so many people have phones and iPhones that it's not really mathematically possible for them to continue to grow at that rate.
Right. People holding on into for longer periods of time. The life cycle of hardware is now, 3 to 5 years. So therefore, people aren't going to just go out every single time to upgrade their devices. And it doesn't help that you have certain people who want their MacBook batteries replaced and new logic boards and things of that nature. That doesn't help. You're cutting into their people are cutting into their revenue in these areas. So.
Right. It's the same kind of thing with the car industry. There are lots of people that have more cars than people with driver's licenses in the house. You have two people and three cars, that kind of thing. And that's what you see at the top of a bull market, when people have just over consumed on everything that there is to buy. People own second homes, investment homes, you name it. And so the market has to have a healthy pullback.
Yeah, and I think I mentioned this before that I was speaking with a landlord of a mall, and they were telling me how much rent it costs for 500,000 square feet, and they were saying something like $20,000 a month, and Apple was paying $200,000 a month in rent. You can't sell that many iPhones and iPads and MacBooks and iMacs and power Mac towers. There's no way you're making that kind of revenue.
Yeah, and the government shutdown didn't help.
Yeah.
And the layoffs are coming. I'm telling you, we're just getting started with these. I really believe that layoffs are coming. It's going to be bad. This unemployment is historically low. Unemployment rate we have is not going to last.
Mm-hmm.
Because that is a sign of, unfortunately, good management. Companies have to get lean. When they know tough times are coming, they're going to sell less of whatever it is that they do for as their business. They're going to sell less of it. and so they're going to have to get rid of folks until the economy basically burns off all that excess inventory and prices come down to a more reasonable level for everything.
Hmm.
And then the new cycle will begin, and companies will start hiring again. They'll take out loans, and everybody will go buy houses again and start flipping houses and buying cars, or maybe not about cars. We'll see about that with the autonomous vehicles. But yeah, so we're just definitely um in a down uh cycle, and I believe this that we are in a bear market. That's my you know you don't hear you hear every other day you hear a different opinion on that, but all it's going to take is for the market to return to having those 300-point down days, and those optimistic articles will go away.
All right, next article is from Forbes.com. Here I am sitting in the cab. Oh, let me read the title. The end of Apple. Here I am sitting in the cab in New York City. I'm heading uptown to Columbia University, where we'll hold the first ever American Disruption Summit. The driver and I are talking about the absurd price tag of the latest Apple iPhone. He's shocked when I tell him that the cheapest model is $1,100, $1,149. Quote, who can afford that, he asks. Apple's imminent crash has begun. Apple has had an incredible decade. Since the iPhone debuted in 2007, the company's sales have jumped tenfold. The stock has soared over 700%. And up until last November, it was the world's largest publicly traded company. But 2 weeks ago, Apple issued a rare warning that shocked investors. For the first time since 2002, the company slashed its earnings forecast. The stock plunged 10% for its worst day in 6 years. This capped off a horrible few months in which Apple stock crashed about 35% from its November peak. That's just a chart showing the wipeout. No candlesticks here.
Yeah, that's ugly.
That erased $446 billion in shareholder value, the biggest wipeout of wealth in a single stock ever. And it's only the beginning. Apple's strong revenue growth hides a dirty secret. If you looked at Apple's sales numbers, you wouldn't see anything wrong. Since 2001, Apple has been steady revenue growth. By this measure, Apple's business seems perfectly healthy, but there is a secret hidden behind these headline numbers. Despite the revenue growth, Apple is selling fewer iPhones every year. In fact, iPhone unit sales peaked way back in 2015. Last year, Apple sold 14 million fewer phones than it did 3 years ago. Apple kept revenue growth only by raising iPhone prices. In 2014, the average selling price for iPhone was roughly $600, according to Statista. When Apple released its latest flagship phone last year, the average iPhone price went up to $800, according to Statista. But technology has always gets cheaper over time. Not so long ago, a flat screen high definition TV was a luxury. Even small ones cost thousands of dollars. Today, you can get a 55-inch from Best Buy for around $500. In 1984, Motorola sold the first cell phone for $4,000. The average price for a smartphone today is $320, according to the research firm IDC. In all, cell phone prices have come down roughly 92%. Frankly, it's remarkable that Apple has managed to pull this off. But let me tell you this: Apple can't raise prices anymore. It comes down to the life cycle of disruptive business. 12 years ago, only 120 million people owned a cell phone. Today, over 5 billion people own a cell phone, according to IDC. Apple was the driving force behind the explosion as the dominant player in a rapidly growing market. It became the most profitable publicly traded company in history. The iPhone sales growth stalled in 2015. This would have been the end for most business. But Apple did a masterful job of extending its prime through price hikes. Its prestigious brand and army of die-hard fans allowed it to charge prices that seemed crazy just a few years ago. Talking to you, Dollar. But now iPhone prices hikes have gone about as far as they can go. After all, what's the most you would pay for a smartphone? $1,500, $2,000? How bad is this? It's so bad that Apple now keeps it a secret. In November, Apple announced it would stop disclosing iPhone unit sales. This is a very important piece of information. Investors deserve to know it. Yet Apple now keeps it secret. Keep in mind, the iPhone is Apple's crown jewel. iPhone generates two-thirds of Apple's overall sales. Let that sink in. A publicly traded company that makes most of its money from selling phones is no longer telling investors how many phones it sells. And its other businesses lines can't pick up the slack for falling iPhone sales. 20% of the company's revenue comes from iPads and computers. Those segments are also stagnant, which means 86% of Apple's business is going nowhere. Could Apple go the other way and slash iPhone prices? I ran the numbers. If Apple cut the prices back to 2016 levels, it would have to sell 41 million additional phones just to match 2018's revenue. Will Apple meet Nokia's fate? Before Apple, Nokia was king of cell phones. In 2007, the front cover headline of major business magazine read, "Nokia, 1 billion customers, can anyone catch the cell phone king?" The iPhone debuted in 2007. Here's Nokia's stock chart since then. Crash, 80%. Now, Dollar Will.
We need to play some music, low and slow. That's pretty bad.
Maybe some Teddy Pendergrass
or something, man. You know, Tim Cook got to be terrified right about now.
Mm-hmm.
What's up? Did Paul join us?
Yes, he did. What's going on, Paul?
What's going on, Paul? How you doing?
Hey, brother. How are you?
What you think about the apple? Is it a rotten apple?
There is a lot to unpack here, and I don't want to sound like Karnak the Great or Johnny Come Lately after the fact, but I was telling anyone who can listen way back in 2014 that when Steve died in 2011 and Tim Cook was Steve's hand-picked successor, and I found out that Tim Cook is a manager and he's not a software guy. He's not even a hardware guy. He's a business guy. I said, if Apple does not continue to innovate, they're gonna go back to where they were when Woz ran the company before Steve came back and he brought the company back, or they could potentially go out of business because they're not innovating, they're not creating a thing. All right? Now, when Steve died, the innovation died. Tim Cook, as I said, he's not a software guy, he's not a hardware guy. Scott Forstall, who was the head software engineer who created the graphical interface and the software for the iPhone, he saw things one way. Johnny Ive, who was the hardware guy who designed the hardware for the iPad and for the iPhone, he saw things a different way. Ultimately, I believe it was Steve and maybe even Tim Cook after Steve died, took Johnny Ive's side. Scott Forstall left the company. For whatever reason, Johnny Ive is not running the company. Tim Cook is. I cannot see how a tech innovation company stops innovating and expects to stay in business. All right? When you have Daquan and Jamal Quavius posted up at the corner bodega with an iPhone, the product has achieved complete market saturation. So raising prices is not the answer. Adding a few bells and whistles here is not the answer. The company needs to keep innovating. Now, to go back to Steve, just before Steve came back, Apple was not even thought of in the tech sector. Right? When Steve came back, he stabbed Woz in the back, forced him out, and then he turned the company around by innovating products. Company has stopped doing that. So now the numbers are self-explanatory. All right, the numbers. I don't care whether you're a fundamental analyst, a technical analyst, the numbers are as clear as the nose in front of your face. There's blood in the water. The company is going the same route that R- RIM went, that Nokia went. I do not see, unless Apple can literally pull a rabbit out of their hat, this company does not have long to live. It doesn't, and it's not it's not speculation. It's based on what the company does. They create innovative products. They've stopped innovating products the day that Steve died. So where is the future of this company? I don't see how one, Tim Cook keeps his job by the end of 2019. I don't see how two, Apple will exist the way we know it beyond. I'm going to say on the Outlook 2020, which is why I said in that email that I sent out, I could potentially see a major whale buying Apple and then leveraging their intellectual property, whether that be Amazon or some other tech giant. What are your thoughts on that, Will?
I guess I think they're going to survive it just because they have the money. But I'll add to your list of things, your predictions about the near future. I think we're going to see the end of free software updates. They got to get a revenue stream.
That's exactly what TomTom does with their GPSs. If you want a software update, you got to pay $29 for it or something to that effect.
Are you serious?
Yeah, they started doing that, I believe, a couple of years ago.
Wow.
It's either TomTom or Garmin.
Okay.
Yeah, that's coming because otherwise, if again, we know, I agree with everything you said, Paul. But let me just say they have an uphill battle because if the economy is slowing down and you have to get new sales in order to survive, I mean, if Apple can't survive the downturn, who can? Given
Right.
the cushion that Apple has. If Apple is one of the last companies we need to worry about in this downturn, they won't be the first to go, okay, by a long shot. So
Well, you know what? I'm sorry. Go ahead, Mike.
No, I was just going to answer this response in the chat that from Abdul. He says that you can look at BlackBerry and I'm sure you see the same nosedive in their stock. There's a difference between BlackBerry and Apple. Apple was always a computing company, so they've always survived off of what they originally did. Whereas BlackBerry was always a mobile infrastructure type of company, where the BlackBerry was tied in with BlackBerry services, right? Biz, and that's what the government, was tied in with it, and then you had major corporations that were tied in with it. The problem that happened with BlackBerry was that when they bought QNX, which is QNX, which is a small operating system for mobile computing and in car vehicles, um, the intention was to buy QNX and use that as the operating system for their phone, and it was actually very robust. It's actually very similar to what the iPhone is, with iPhone iOS is. The only problem is it was too late in the cycle for them to actually get it up to market. So they bought it in 2008 or 2009, and they weren't able to get the operating system implemented until 2014. That's too long of a cycle in the computing world. One year is a long time. So if you factor in 1 year for every 3 years for life cycle development, BlackBerry was already 6 years behind. It was too late.
Right. And there was another market that a friend of mine who owns his own animation, web design, web hosting, web security business. There was another market that contributed a substantial amount of money to Apple's bottom line, and
Mhm.
that was animation from
Pixar.
yeah, not even correct, but not just Pixar, but I mean um, people who worked for Pixar, people who worked for other studios,
Mhm.
animators from studios down to individuals in their basements.
Mhm.
Okay, those machines, animators, they loved those the what is it, the Mac Pro, the actual towers and the cubes and those machines, and they would stack them and configure them for the processing power. apparently over the years, um, as prices of other machines have come down, those Apple machines have fallen out of favor. Because yes, it was the user friendliness and the processing power, but Apple products cost too damn much. So even if you're a major studio, or if you're a television channel or a network or a media outlet, if you're looking at potentially five to $6,000 for the top of the line Apple animation machine, whereas a machine from another competitor is under 1,000, you know, six to less than 1,000, it's a no-brainer. So Apple has lost that revenue stream as well, which they don't talk about. Now, coming back to what that article says, when a company, and I know this is right up Dolores Avenue, when a company stops reporting individual unit sales, that is blood in the water. I don't know how this is gonna turn out for Apple long term, but it's nothing good. It's absolutely nothing good about that.
Well, there's no technical on terms of the charts. There's no technical reason to buy Apple, and with their lack of transparency, there's no fundamental reason to buy Apple.
Exactly, and as I'm well on record in saying, I'm a classically trained economist, classically trained fundamental trader. It's what I did in a past life. Listen, I would not touch Apple now with a 10-foot pole. And I've been saying that since 2014, really since 2011, right after Steve died, because I couldn't understand then why you would pick Tim Cook to run the company and not Johnny Ive. If you could tell me that he wasn't the right person to run the company, technically neither was Steve, but he did a hell of a job. So why not let Johnny Ive run the company and maybe hire Steve, um, let Tim Cook take an advisory role with a bunch of other people, similar to what Henry Ford II did in the 50s when he hired the quote unquote whiz kids. And within 3 years, they had the company turned around. Okay, so the template and blueprint is out there, but Apple didn't do that.
You know what's also a little suspicious? We never hear any information about iTunes sales.
Because it's
The
funny.
Apple Store. You know what I mean? The music streaming music.
iTunes.
iTunes. Yes, we never hear any buzz about that.
You used to. They used to post the numbers, and then they stopped for whatever reason because that was affecting how Billboard would report sales, right? So if you went platinum on iTunes, you were good. If you sold a million songs on iTunes, you was good.
Yeah, it's funny you say that, Dollar Will, because my thinking, maybe it's negative, maybe it's wrong, but my thinking was that the official term is piracy or illegal downloading, that maybe that has over these years cut further into that business than anyone cares to admit.
I don't know. I doubt that because I
Okay.
think we saw. Well, again, I will, if you see some information on that, I'll defer to you. I'm just
No, no,
going
no.
with my,
I don't know.
because
I don't know. I'm
you're
just
the,
guessing. I'm
yeah.
guessing.
Well, I'm guessing too. My guess is no better than anybody else's on this, but I'll just anecdotally from like friends and stuff I know. At some point, the culture shifted to paying for streaming music services, and at some point, people determined that $9 or $10 a month it wasn't worth stealing the music.
You know what? That is an excellent, excellent point. You make an excellent point. Why buy individual songs for $1 or $1.99 when you can just stream? It is basically the same. It's in the mindset. It's basically the same thing. Whether you have an iPod or you have your iPhone and you're streaming, it's net the same effect.
Hmm.
And long term, you're actually paying less money. So you know what, Dollar, I didn't think about that. You make an excellent point.
Yeah, but Apple's got to do something. They got to get more revenue. So, and Apple really had outside of iTunes. I guess if we want to talk about, I guess a cloud service, I guess we could consider iTunes a cloud service. But for as big of a company as Apple is, that it's shameful that they don't have a an iCloud presence on par with, say, Adobe. I mean, Apple has Final Cut, and what's the other one? Logic. And you would think that they would have a cloud presence with some type of subscription base to it, like Adobe.
Yeah, that's true. I think what's going to happen going forward is they're going to break the company apart, right? You'll just have Apple hardware division, Apple software division, and then Apple, content division, for music and movies and things like that. And that would make up for, for revenue, not for revenue, but for earnings postings, where they can, kind of phase out hardware, because hardware is not really going to matter anymore unless they have something revolutionary. And I've talked about this before, that they have to figure out a way to create telephony capabilities on their Apple Watch. If they do not figure that out, and because Huawei has figured it out, the only reason you don't see it now is because Huawei is banned from the United States. You can't buy their devices. But if Huawei had access, in the United States, I can almost guarantee you that Huawei watch that's out right now in China would destroy Apple almost single handedly, because that watch actually has 4G capability, 4G LTE voice capabilities. So all you need to do is basically hook up your Bluetooth headset to the device, and it actually allows you to make phone calls out.
Yeah, it's like we're also not even getting information about Beats headphone sales or Apple Beats headphone sales. We have no way of judging whether that was a good deal.
Well, that was the corner to customers, if you really think about it, because the Beats customers was really what they wanted, because the Beats headphone sales were massive. Even the NFL, I think the NFL doesn't allow anything other than Bose now, because Bose bought their way into it, and pushed all the Beats headphones out. You see this in the NBA too. All the players come, to press conference, or they coming into the game with Beats headphones on. That was a major advertising campaign for for Dr. Dre and Jimmy Iovine.
I'll say this about the iTunes. I look at most of my movies on iTunes, but I am steering away from it because that just the entire proprietary business where you can only look at their movies on their products. I'm tired of that. That's come on now. So I think because of I'm going away from it because anyway, I don't know what I'm trying to say, but I don't think their iTunes business is doing spectacular.
Mm-hmm. Mm-hmm. Yeah. In order, for them to justify selling a $2,000 device, at this point, they would have to sell a 55-inch TV with iTunes and everything integrated into it, with Apple TV integrated into a flat screen TV. And it would have to be spectacular. It have to be curved, or there have to be something, like touch sensors on it, or Siri built into the TV, and et cetera, et cetera, et cetera. It would have to be something just to justify $2,000 for an item.
Yeah, and just to you know repeat sort of what Paul was touching on. I have a media background, and you go back about 15 years ago. People, if you worked at say a TV or radio station or recording studio, people didn't trust the software unless it was running on an Apple.
Mm-hmm.
But the rest of the computer industry caught up, and nobody cares anymore. It's not, all of the computers will run the software. PC works just fine. You go back in time, Microsoft and PC manufacturers were concentrating on the business sector, and they didn't care about media production. So they just basically let Apple have that. And then as it grew, then the PC market came in, and then over time they became just as the PC computers started running the software as well as Macintosh, and nobody cares anymore about the computer. People don't even debate that kind of stuff anymore. What type of computer are you running the software on? Nobody cares.
Well, and I think at one point people were running boot camp, Windows and on Mac and things like that, and because they needed the applications to work, or they
Yeah,
just
because
wanted.
they didn't trust PCs, but then over time the PCs have gotten so good at running the media software. I mean, now people are like, well, why do I have to spend all that extra money for a Macintosh? I can get a PC and it'll work just as well.
Hmm.
So they don't have a reason, to make people feel justified in paying that premium. They got to do something. They don't have a hardware edge. They don't have a software edge. They don't have a strong cloud service presence.
Yeah, and Paul touched on something I was saying last week, that Tim Cook could be out of here by 2020. His days are numbered. He's not. He doesn't have the charisma of Steve Jobs. He's not an innovative person. He's just a puppet. A mouthpiece for Apple itself, and it's not looking good for them. Their customers are not used to this sort of monotone, Mike Pence sort of posture that he has. Just
And if you can't give us substance, we'll settle for style. So they need some kind of some kind of
Charismatic.
personality, some kind of charismatic leader to come in and add some new energy to the company. And it's not Tim Cook.
Yeah, and look at Microsoft. When Microsoft had Ballmer in charge, Steve Ballmer, he actually set the company back years because of his, flamboyancy in leadership. It wasn't working well with that line of business. And now you have, this Indian guy in charge, Satya. I think that's how you pronounce his name. He has transformed the company around dramatically since he's come in. He's a real technocrat, if that makes any sense. He understands the market. He understands how to create more diversity inside Microsoft. Because from what I've heard, we're talking with people. Microsoft is more diverse now than it was before. Like it's just not uncommon to see POC inside Microsoft in leadership positions, not just in the tier one position. You have a lot of people in leadership that are POC now, so which is good.
And yeah, and they got little cooler with the Surface and some other products, and I don't use Windows 10, but every time I look at it, I'm like, well, that looks kind of Apple like to me. I mean, I would not shy away from using it, and but I know we don't expect Microsoft to be Apple. We on the spectrum, we kind of expect Microsoft to be closer to IBM than to Apple. But yeah, I agree with what you said. Microsoft, they have made themselves a little cooler. They've gotten a few cool points.
Yeah, and their brick and mortar presence is actually being felt. Wherever there's an Apple store, there's a Microsoft store within 5 minutes of walking. So they figured out that recipe, and they're using it to their advantage because it doesn't cost them a lot to run a store. If you really look at the design of the store, it's relatively cost effective. It's a couple of wooden tables, a few portraits here and there, and a bunch of computers on desk, and you
Don't
choose.
forget the geeks. Don't
What do you mean?
forget the geeks. A couple of geeks. Gotta have geeks.
Oh
Staff
yeah,
geeks.
oh yeah, oh yeah, and they allow you to use their store, their retail space if you want to do a meeting. That's another thing that Microsoft has figured out. So if you want to have like a meeting in a certain portion of the store, you can actually schedule that out on within the store itself. I've been to several meetings that are even non-computer related where Microsoft has allowed that sort of space to come in, that space to be allotted.
Wow, that's awesome. So yeah, that you'd expect Apple to do that, especially have people come in and do like animation or some media projects and get some free guidance from the geeks, from the house geeks. But no, nada. No innovation, as you said earlier.
All right, let me get to this next article. This one is from BusinessInsider.com. Apple is selling the iPhone SE again, its smallest, cheapest, arguably best phone. If you're still mourning the iPhone SE, Apple's last small iPhone, then good news. Apple has quietly resumed selling the compact phone on the clearance section of its website, where deals on products occasionally pop up. We first spotted the news thanks to Mac Rumors. Prices for silver, rose gold, space gray, or gold models start at $249 for 32 gigabytes, down from $349. A 128 gigabyte model comes in at $299, down from $449. The phones are new, unlocked, and come with 4-inch Retina display in Apple's A9 chip. There's also a 12 megapixel rear camera. This is a screenshot of the actual phone. It looks like it's only available to U.S. customers. The UK version of Apple's site doesn't list the iPhone SE in its clearance section. Apple stopped selling the iPhone SE in September 2018. The only remaining 4-inch iPhone and one of the last models to come with a headphone jack. The device originally came out in March 2016. The iPhone SE was considered Apple's best iPhone among the what the hell is that word? Thanks to the fact that it packed the guts of a higher end iPhone success into the smaller body of an iPhone 5S. It was also cheaper than the rest of Apple's flagship lineup at a starter price of $349. As it stands, the cheapest iPhone you can buy directly from Apple right now is the iPhone XR or iPhone 7 for $449. Yeah, so I guess they had to, get some attention, to a more value-based phone comparison to Samsung, right? And LG and the rest of those other Southeast Asian companies that were really killing them in the market. But who wants to spend $249 on a small 4-inch iPhone when you can get yourself a 6-inch, OnePlus 6T with all the latest features and charge your phone in 10 minutes, fully, widescreen capabilities, 28 megapixel camera. Who wants to spend that kind of money on an iPhone when you can get that from an Android based device? I just, Apple at this point, Apple is trying to throw a Hail Mary.
Who wants to spend that amount of money? Someone that's really brand loyal. Well, this will be an interesting test for Apple, because if that phone fails, then that would be dire for Apple, because all they have is the brand loyalty. I mean, you made the argument about comparing the quality of one of the alternatives that exist in the marketplace. Well, Apple has never really been about that. People would buy Apple regardless, just because of the brand power. And if the brand power can't sell a $250 phone, then that's that's terrifying news for Apple. So we'll see. We'll see how it goes, but there are a large number of people who will buy the phone just to have an Apple, just to have an iPhone. Because there's people get shamed for not having either you have an iPhone or you have a Samsung. People get shamed for having any other phone.
Lino?
Yeah, I have to agree with you all. If it's telling, the breadcrumbs are there. If this doesn't sell, then it's telling. I agree with you, Mike. these Android-based manufacturers are selling iPhones that are cheaper and offer more features.
Hmm.
So you really have to be not in the know to say, hey, well, Samsung can offer me this. You have to have that tunnel vision and say, well, I just buy Apple products. Um, Me, I don't think I'll be buying another iPhone. But if this doesn't sell, Apple, I think we're all in agreement that Apple has to do something.
Hmm. Right. So Paul Bryant just left. Huh. All right, this one is from MotleyFool.com. Why Ford's operating profit dropped 28% in 2018. Ford Motor Company posted a loss of $116 million for the fourth quarter, more than explained by an accounting charge related to its pensions. But the company said that its fourth quarter operating income, including the pension charge and other one-time items, dropped 28% from a year ago to $1.5 billion on sharp declines in China and Europe. Ford's full-year operating profit, excluding one-time items, also fell 28% to $7 billion. On a per-share basis, excluding one-time items, Ford earned 30 cents in the fourth quarter and $1.30 for the full year. Both were down from Ford's results a year ago, in line with preliminary numbers Ford released last week. Ford earnings, the raw numbers. So revenue for 2018 was $41 billion. Wholesale shipments of 1.4 million vehicles. Actually, this is just for Q4. In the total year, the revenue was $160 billion, and shipments for the full year was close to 6 million vehicles. Sorry. Net income loss was 116 million for the fourth quarter and 3.68 billion for the whole entire year. And adjusted operating cash flow, 1.5 billion for the fourth quarter and 2.8 billion for the whole entire year. There's something wrong with it. I'm not a fundamental. I don't understand the fundamentals to that aspect, but there's definitely something wrong there. If your operating cash is at the fourth quarter was only 1.5 billion, but 2.8 billion for the whole year.
Yeah, we need Paul to come back. I don't even want to try to evaluate this because, like, I'm a technical purist. But Paul comes back, he can break that down, see what he can glean from it. But we talking Ford. They're gonna be around. It's gonna hurt. But I think when you're looking at big ticket items like this and a brand like Ford or General Motors, and it just tells you where we are in the economy. What we're saying here is that the economy is definitely slowing down. But Ford has that F-150, right?
Yeah, that's what's in the picture right there.
The F-150 and the what else they got? The SUVs are selling pretty good.
Ford Explorer.
Yeah. So and the what's the other one? What's the big one? No, that is it. That's it. Their biggest is the Explorer, right?
The big one is the Expedition.
Expedition. Okay, that's the one I was thinking of. Yeah, that's the one.
Lionel, you have anything you want to add to this?
Yeah, I saw an article a couple days ago that said Ford's stock jumped uh, upon their announcement of autonomous vehicles. Um, but we all heard that America's taste for cars has changed, and from going from sedans to these larger vehicles.
Hmm. Paul Bryant, you have anything you want to add to this?
No, I'm sorry about that. The Wi-Fi and the B&B I'm staying at crapped out, and it's like,
You might, Mike, can you put up the numbers again? Maybe Paul, I know we putting you on the spot. You take a look at the screen and see just if anything jumps out. We know you can't do any real deep analysis looking at this quickly, but we'll give you a second to look it over. We'll yap on. Just kind of look over and tell us what's the most important part of this chart we're looking at. What jumps out at you, and we're just going to talk about Ford. You'll let us know. Just jump in when you get, help us understand what's salient point in this graph. But yeah, so in this in between time until we get these autonomous vehicles ready, Ford is they're preparing for tomorrow. I mean, wasn't Ford the first company to basically make the announcement they were really going hard into the autonomous vehicles, and they're going to cut their lines? Wasn't Ford like the first American auto manufacturer to make that public?
Yeah, they were first.
What jumps out of me, a few things. First of all, if you're looking at revenue for the full year 2018, 160 billion. 41 billion was in the fourth quarter alone, right? And I'm looking at net income, and I'm also looking at adjusted operating cash flow. So when I look at the adjusted operating cash flow, 2.8 billion, but 1.5 was in the fourth quarter alone. I don't know. That looks heavily weighted toward the end of the year. So what was the company doing for the other 9 months?
Do they have a lot of discounts at the end of the year?
They shut down at the end of the year from a manufacturing standpoint. I think they shut down for about 2 weeks in December.
Okay. And so what is adjusted operating cash? Just first of all, what is that, Paul?
Adjusted operating cash flow. Well, from my knowledge, that is after you, basically it's like EBITDA. After the depreciation, the amortization, all the taxes, the overhead, all of the back end loaded debt. Like if there was debt that they can push forward from one year to another.
Gotcha.
After all of that.
So just purely, honestly, what happened this quarter, not stuff that was carried forward from previous quarter.
Right. Correct.
Gotcha. Okay.
So when so much of the total for the year is in the fourth quarter alone, that's not a good sign, especially when it's the end. If it's any quarter, you normally look for a smooth, continuous number. If you're going to see a spike, then you want to see that spike surrounding something directly related to the business. So at the end of the day, if you're selling widgets, then that's where you want to see your spike. Like when Chrysler first introduced the Chrysler 300C back in, when was it, 04, 05, and they had like 300,000 units or 400,000 units in the 1 month, the highest ever in the history of the automotive business. Then you want to see that kind of a spike. But when I'm seeing 1.5 billion out of 2.8 billion, and it's in the fourth quarter alone.
And I'm also looking at the earnings per share, right? Okay, if I'm looking at this right, the 2018, the third column, so that $1.30 per share, that's for the entire year, right?
Right.
Yes.
And the first column is just the fourth quarter. That's the last 3 months of last year. So if we take that, okay, so 30 cents multiplied by 4 would be $1.20.
Right.
So that means if we were to divide their quarterly earnings per share was more than 30 cents. So that 30 cents for the fourth quarter would have to be a down quarter relative to the other three. because 30 times 4 is $1.20, but they made $1.30 for the year. So their quarter over quarter earnings was likely down.
Mm-hmm.
Exactly, and that's what's jumping out at me at the end of the year. And historically, car companies usually sell their least amount of vehicles in the last quarter.
Mm-hmm.
So,
Oh wow! I would have thought otherwise, because when the new line usually comes out like September.
No, their peak months are usually in second quarter.
yeah,
Oh, okay. Like
mhm.
what? Right after the snow, the people
No,
get.
right after what is that? What's that holiday in May, or June?
Yeah, East,
Memorial Day.
Yeah,
yeah,
Memorial Day,
right.
Oh, okay. Wow. Okay.
and then tax season too. So tax returns also makes up for that. So
Hmm.
Gotcha. Wow.
And another number that jumps out to me, sorry for chewing in your ear, wholesale shipments, which I'm going to assume is total units sold. I'm assuming for the entire year,
Yeah.
the entire year is 5.9 million. Yet for the fourth quarter of 2018 was 1.4 million. So I'm no mathematician, but again, that's telling me that they did not do a lot of business in the fourth quarter. So again, you generally want to see a nice smooth upward number, or a flat number. You don't want it flat, but you'd rather have it flat than be down, obviously. But wait, hold on. Let me think about that.
Multiply by 4. Yeah.
It's
It's a
I
little
don't
low.
know. I don't. It's what it's looking a little thin to me. And again, I'm drawing back to the 160 billion for the year, with 41 of that came in the fourth quarter. At Again, at the end of the year, you know, it's it's looking to me as if the fourth quarter was very soft for them.
Yeah, I'm looking at the what is it? The earnings, the adjusted yeah, what's that? Earnings before what? Interest and
Um,
taxes? Is that what is EBIT? EBIT.
yeah, that's earnings before interest and taxation, but the full margin should be EBITDA, earnings before interest, taxes, depreciation, and amortization.
Right.
But the numbers that I would really want to look at, I would really want to look at um, total volume of total vehicles sold, and I would want to look at, I would want to see an itemized breakdown of each model year over year sales. If
Right.
those are all down across the board, now you're in serious problems. And I really want to look at the sales of the Ford F-150, because
Yeah.
the F-150 is, for 35 years now, has been the number one selling vehicle in America. If those numbers are down, that keeps the lights on at Ford, the F-150. If that's slowing down, then
So
boy,
that's the
water.
iPhone of Ford.
Yes, it is the Ford F-150. It's the number one selling vehicle in America. And for those listening, I'm going to repeat that: number one selling vehicle, not car, but vehicle. There are more F-150s sold than anything else in this country, cars and trucks. It's the number one
it's
selling vehicle.
yeah,
Wow, I did not know that.
it's a utility vehicle. So it gets used for multiple purposes, whether it's for government, agriculture, or for just personal use. It gets used across multiple lines. And instead of something like a Ford Escort or a Ford Focus, you can only use that, in one or two areas.
I'm sorry, I just wanted one other thing on that EBIT at we should go back to that chart real quick, Mike. Just one little thing, because this number don't add up either. That adjusted EBIT, if you take that first column for the first quarter is 1.46. If you multiply that times 4, you get under 6 billion. You come over to 2018 at 7 billion. So yeah, that's at least $1 billion off for the fourth quarter. That's pretty. That's all. I wanted to point that out.
But I'm curious as to why it's saying adjusted EBIT and not EBITDA,
Right.
because EBIT is earnings before interest and taxes. EBITDA, earnings before interest, taxes, depreciation, and amortization. Because businesses like Ford, they have it's kind of creative bookkeeping, but they get to write off the depreciation on their factories, on tools, money that they spend to help finance parts supplies and things of that nature.
Well, I want to call everybody's attention to the interpretation that Paul has to do to understand what these numbers mean, and the interpretation that people have to do to understand what Apple's sales mean. And that's why I'm a technical trader. This is it. This is it. Because you can't get two accountants to agree, or two analysts, let me say, to agree on the meaning of these numbers. And then you got to go listen to the earnings report, from the CEO or whatever. They're going to spin it. So I just rather read the stock chart. That's all I wanted to point out, Mike. Thanks.
Let me jump to the next article real quick. This one is from face-to-faceafrica.com. Top 10 African countries with the world's fastest growing economies in 2019. 2019 looks to be a good year for the continent if the economic projection by different institutions is anything to go by. According to the African Development Bank, the continent's economy is set to accelerate to 4.0% in 2019 and 4.1% in 2020. In its 2019 African Economic Outlook report, the AFDB also indicated that the continent still faces quite a number of challenges, including, quote, risks from uncertainty and escalating global trade tensions, normalization of interest rates in advanced economies, and uncertainty in global commodity prices could dampen growth. From the report, East Africa is set to lead the continent in improved economy with a 5.9 growth in 2019, followed by North, Central, West, and Southern Africa. The International Monetary Fund also predicted an improved economic growth for the continent, with top 10 African countries showing more than 6% projected growth. However, more needs to be done to achieve or surpass these projections. Here's an interesting one. Libya. According to the IMF, Libya is projected to have an economic growth of 10.8%, a drop of 0.1% from 2018. Ethiopia comes in second with percentage growth of 8.5%, an increase from 7.5% from 2018. Yeah, I can see Ethiopia doing that. Rwanda's economy is projected to increase by 7.8%, an increase from 7.2% in 2018. Ghana is projected to increase from 6.3% in 2018 to 7.6% in 2019. Ivory Coast, with a projected growth of 7.0%, Ivory Coast dropped from 7.4% in 2018. Senegal. This West African country is set to improve its economy by 6.7%, a drop from 7.0% in 2018. Tanzania is projected to improve its 2019 economy by 6.6%, an increase from 5.8% in 2018. Benin. In 2019, Benin economy is set to increase by 6.3%, an increase from 6.0% growth in 2018. Uganda in 2018 was projected to grow 5.9%, but it bounded back at 6.1%. In 2019, it is projected to grow by 6%. In Kenya, the IMF predicts Kenya will have an economy growth of 6.1% in 2019, an increase from 6.0% in 2018. Now, reading off these countries, which one of these countries would any of you gentlemen visit in terms of doing business based on the numbers?
I honestly, I wasn't listening to the numbers in a comparative sense to be able to give an answer to that. But I like the attention that Ghana is getting. It seems to be friendly to Americans, Black Americans, and Americans. So Ghana would be of interest.
Lino?
You know what? I'm gonna pass my turn. I want to get my thoughts together.
Paul Brain, put down that bratwurst.
And the beer.
Sauerkraut.
No, well, actually, it's the German national dish, which is the potato called Tafel. But um, I have to give credit to you guys, to the Black Brain Trust, for changing my perspective on the infrastructure or lack thereof is the investment opportunity right now in Africa. Um, Having work there, which means you live there when you work there, the infrastructure is still a monumental, and I'm not understating, a monumental challenge. But that is the investment opportunity. So I would say any of those nations. I'm a bit surprised at Libya per se, given what one Barack Hussein Obama left his mark when he had the leader of that nation killed. But I digress. But for doing business opportunity right now, I would say, other than Libya, I would not be against investing in the future infrastructure endeavors of any of these nations. I am curious to see how these things play out. I know the CIA is there. I think the CIA is there. I know MI6 is there based on the things that MPs say. So I know that they're there. So I'm curious to see where the future development is. To quote you, Mike, Africa's hot, and the investment opportunities abound, and all eyes are on the continent now.
And once when money from around the world, pours in, or as money pours in, I think we're going to see stability real fast because it's going to be too many other interests there, too many other entities with something to lose. So big money. They're gonna take into account security concerns.
Yeah, I mean, you're always going to have security concerns, but from an infrastructure perspective, like Paul was mentioning, there's a lot of work that needs to be done. Two-thirds of Africa has not been developed. So you have a lot of black men in the United States who, whether they're in the union or they're not in the union, then they're either working or they're not working. You got certified plumbing and gas fitters here. You got master electricians, master carpenters here. A lot of blue collar black men who are working on the assembly lines in Detroit, in Ohio, uh, who can't find work now because of shutdown of these plants in the Rust Belts. There's a lot of opportunity over here in Africa right now. If you could turn a wrench and you can use a multimeter, or you can use a how to read ohms and things like that. There's a lot of opportunity going on over there.
I was okay. Quick question: what was the West African nations? I know you said Ghana, Senegal, Cote d'Ivoire, and wasn't
No, it said Ivory Coast.
Yeah, yeah.
Which is Cote d'Ivoire in French.
Okay.
It was another one, wasn't it?
No, I think that was it.
Okay. To just to be to go against the tide, I wouldn't say Ghana. I would say Senegal, even though I know they speak French, but I was live more toward the Gambia area, which speaks English, and they're more friendly, a lot friendly to um, American/Jamaican culture. And I know that I can have more of an impact just based off this article. Where I would go to more of an impact in terms of helping the uh, the economy become more, bring more infrastructure to the economy.
Yeah, I tell you what I've never done and what I need to do. I need to do see if we have any companies trading any of these African in any companies in these areas trading on the American stock market, any under like ADS stocks trading here. So that would be a way for people to profit off of the growth and never leave America. For people who want to participate, but for various reasons they don't anticipate moving or visiting.
Well, there are companies that do business there, but they're international companies. So, like,
Multinational.
I get what you're saying, Dollar Will. Companies that do business there that trade here as an ADR. Offhand, I don't know. I would have to look into that. I know, again, like I said, international companies, there are many U.S. companies and European companies that do business there, but it's not exactly what you're saying. So I understand what you're saying. And yeah, I would have to look into that as well because I don't know offhand of a specific African company that's doing business or a large or that's trading here as an ADR.
Well, I do know that there are some of the gold companies have that you can look if you're looking at gold stocks, you click on profiles and you can see where they do business, where their mines are,
I
and
personally,
there are a good number of them that we can easily trade.
um, for me personally, maybe I'm being irrational for once. I have a problem with that given the history of the gold and diamond trade in Africa.
Hmm.
Okay, we should have a different. That's probably warrants its own conversation. I understand what you're saying,
And
in that respect. But here's my view could maybe be somewhat controversial. Um, I I think that the only way that and I would like the other opinions to this. if you're getting exploited for your resources, if you can't profit on the front end, you can profit on the back end by investing in the company that's exploiting you, or the material, if it's jewelry, or some other country/company is extracting the gold and minerals, and they take and make it into a finished product. Well, if you invest in that product, you can profit that way. If that's the only way.
My only concern with that is what happens when the mega powers put sanctions on that company and you can no longer do business with them. Then their whole strategy goes right out the window.
which is what happened to the apartheid sanctions.
Right.
Well, then I'll respond with, hey, buy an ETF. That's what I do.
I'll say
Buy an
this:
ETF.
what you just said, I can't argue the logic. So, on its own merits, I have to concede. I have to concede the validity of what you just put forth. To me, it makes perfectly logical sense.
Yeah, they
I'm
got
not.
good.
I can't necessarily co-sign it, but I can't argue against it logically. It does make sense.
Hmm.
I'll take that. I'll take that. Even if it's just a moral victory, I don't have to feel shame that I'm betraying Africans by buying gold ETFs, or right now everybody knows I'm long the dollar. I do not believe in this gold run. Okay, but just for the record, but there will come a time that I'm going to be all serious about buying gold,
Hmm.
and I won't let geopolitical interests stop me from buying, eliminating an ETF because it's got African gold mines in it.
You
I
know
think
what?
I think black people, if that's the way that we can profit, and Africans themselves, if that's the way that they can participate in the wealth that their minerals create, then that's what it is for now.
And again, I can't argue that logic. I'm going to leave the wider discussion that surrounds that to a different time, if not venue. But I will say this. Um, from a philosophical point, I can readily admit it's controversial. I don't see it as I don't feel it's controversial, but I'll admit it is controversial to many. I'll add to that. There were many European Jewish people, some who were even German, who profited from the things that the Nazis did against Jewish people. And when a lot of those stolen artifacts and stolen properties went up on the black market, some of them profited in that black market trade. And I'll leave that there. Some may feel that's apples and oranges, but I think philosophically that may kind of have some relevance to what Dollar just said.
Well, and I'm also thinking from the standpoint of buying the stock does not it's not to my mind, it doesn't it's not a contradiction, and it doesn't preclude you from fighting for human rights
Hmm.
of workers. And
Mm.
so it's not mutually exclusive. In fact, an argument can be made: if you are a stockholder in the company, then your efforts to bring change is probably stronger if you're arguing from the standpoint of a stockholder.
I, I think that's kind. I want
Yeah,
to.
yeah, yeah. That's a big one. We're into the quote unquote socially responsibility territory. It's like if I buy the company stock, does that mean I'm condoning their behavior? Especially if you're buying it in secondary market. That's tricky. But I don't I don't see it that way in this regard. But I don't know. I could be moved from this position because I it's not like I would buy. Let's say if the Klan was selling Coca Cola, I'm gonna buy Clan Cola.
But see,
No.
but see, then that's like saying that I should go out and buy De Beers ADRs, and I'll tell you right now, I refuse. I refuse to have anything to do financially with De Beers. But you know what? Maybe that conversation is best left for a different venue.
I know. You have anything you want to add?
Well, Norway, the country invests in stocks, and they invest in so many stocks that they have a say so in whatever they feel they want to change when in that company. So that is somewhat along the lines of what you all were just talking about.
Yeah, that works for Norway because they're a country, they're a nation state. But when it comes to African Americans, you're not a nation state, right? You don't really have that sort of leverage.
Yeah, I guess what I'm saying is for the Africans, even that if they're working in the mine, they're already you're knee deep in it already.
Yeah, but they're not even on the books, if I remember correctly. They're not even on. There's a lot of cases of human rights violations and things like that. That you know, you would never really hear about unless you're actually going there for yourself. Some of the videos I've seen make me wary of even investing in something like that.
Yeah, and then there are still conflict diamonds out there. Right, that's a very real thing. Even even with all the lip service that gets paid to it, that's a very real market out there. So maybe that's apples and oranges to this conversation. So I'm just gonna let you gentlemen take this from here.
Yeah, one company I would pick off. One country I would pick off that list out of the top 10 would be Rwanda. I like what Paul Kagame is doing. It seems like he said in one of the last hangouts that we had um, that he wants Rwanda to be a tech superpower on the continent by 2020. That's only about 12 months away. So
Mm. I like it. I like the talk. I like the energy. I like the effort directed. If he can make that happen,
mhm,
I like that. I always say strike while the iron is hot.
mhm.
So if he can make that happen, I support that fully.
I know. Did you pick one yet?
The Senegambia area, or Senegal near Gambia.
Okay. Any reason?
Well, the article said that Senegal will be, since Senegal is not a greatly country in terms of main infrastructure, that means it's that much improvement that's needed. And I feel that in that situation, I can provide a bigger um, hand in creating infrastructure. And plus, even though Senegal speaks French, I will live near the border to Gambia, which speaks English, and they're open to a lot of African American slash uh, Jamaican culture, and I feel that in that area, I can make a great impact.
Hmm. Paul Bryan, did you have one?
One in particular, without having more information, Senegal, only for the fact that there are reasons Senegal is near and dear to my heart. So that's purely a emotional response. But as as I said, for me, the numbers went out. So wherever the greatest opportunity for infrastructure investment lies, I would go there first. But my mind, in the back of my mind, it's always to what's next, what's next, what's next, what's next.
Hmm.
So if that means I would pick one, yes, but with always with the intention and mindset to branch out to the others for more infrastructure in investment. I don't believe in limiting myself in anything.
Hmm. All right, we'll jump to the next item on the docket.
Well, we got something from the chat from Abdul L. He said, "Was the company with it Mondelez?" I wasn't familiar with that. I see they're into a lot of food and confectionery. Oh, Cadbury. Wow. Okay. Nabisco. Whoa, they own Nabisco. All right. I gotta look them up because that's an area. They're in that staples sector, consumer staples sector. We need to take a look at. But that's it.
Yeah, next item on the docket is from the World Economic Forum posted this week. Africa's leadership in the new global context. If you haven't got a chance to watch this, for those listening in the chat, when the hangout is over, when the stream is over, take some time over the weekend and actually sit down and listen to these African leaders spell out their initiative for the next cycle. And talk about the fourth industrial revolution because that was the main focus here. I like Paul Kagame and Cyril, Cyril, Cyril Ramaphosa. I like both of their strategies. I think that both of their economies are going to be booming in the next cycle. So um, Rwanda just laid down fiber into their country. Still not fully completed, but they started the process already. South Africa has fiber, so there's a whole lot of opportunities that's going to come out of those areas. Their military industrial sector is actually booming for South Africa. Um, and the tech sector in Rwanda is booming. We just talked about that a few minutes ago. We did a hangout on Rwanda and on Africa's digital transformation, and Rwanda was one of the top countries on the agenda in terms of the startup scene. So billions of dollars is flowing through these areas, and these are opportunities I think we should be getting upon and paying attention to. Lionel, did you get a chance to watch this?
Yes, President Ramaphosa said himself that some of the technological areas that they need to be getting into is AI and blockchain. I know that we've spoken about President Kagame in Rwanda and what they're doing, different things they're doing, which he is the head of the African Union. South Africa, he mentioned that President Ramaphosa mentioned how he knows of I think he said between 9 and 14 million people that are out of the job, unemployed, and that's mainly the young people. Um, and he wants, I understand that they're saying that they want to do this and they are cognizant of these new technologies, which is a start. Um, I want to see more articles on them actually on these countries actually taking these steps. Saying South Africa did this, Rwanda's doing this, and so forth.
Paul Bryan, did you get a chance to look at this?
Actually, I didn't. I actually basically lazed around most of the day. I actually did not get a chance to get to this one. I specifically wanted to look at this one. This has definitely become one of my points of interest. So I haven't had a chance to watch it. I will watch it later today when I wake back up. So unfortunately, I don't have much to add right now. But I am definitely you have definitely sparked my interest, and things like this are on my watch list.
Hmm.
Yeah, I also didn't get a chance to watch it. I will.
Okay, we'll jump to the next one then. All right, this one is from channelnewsasia.com. Brexit, the Irish backstop issue explained. London. Keeping the Irish border free flowing has proved to be the toughest issue to resolve in negotiating Britain's exit from the European Union. The Brexit deal between London and Brussels, overwhelmingly rejected last week by British MPs, contains so-called backstop provision ensuring that if all else fails, the border will remain open. The boundary on the island of Ireland between Northern Ireland, part of the United Kingdom, and the Republic of Ireland is currently invisible. London, Brussels, Dublin, and Belfast all want it to stay that way. However, making this compatible with Brexit is a circle yet to be squared. Why is this an issue? Both the UK and the Irish Republic are EU member states. After the UK leaves, the Irish border will become an EU external frontier. The British government aims to leave the EU's customs union and single market, meaning checks would be required on products coming in and out. Britain, Ireland, and the EU have pledged to avoid any physical infrastructure or hard border. Many fear it could upset the delicate peace process that ended decades of sectarian violence in Northern Ireland. Residents and businesses on both sides of the 500 kilometer frontier also emphasize the importance of maintaining the free flow of trade and passenger traffic. What did the EU propose? First propose. The EU proposed a backstop in the draft deal that envisioned keeping Northern Ireland and elements of the bloc's single market and customs union, meaning it would have to accept EU rules on quality standards and apply EU tariffs. May's conservative minority government is propped up by the Democratic Unionists, Northern Ireland's pro-British, pro-Brexit party. Many conservative MPs in the DUP said the proposal was unacceptable. They argued it would effectively carve off Northern Ireland from the rest of the UK and create a border in the Irish Sea. The British mainland accounts for 58% of Northern Ireland's sales outside of the province, nearly 4 times of the value of exports to the Republic of Ireland in 2016. This is actually pretty long, but basically this with this whole Brexit deal, there's a Irish wall card, so to speak. Paul Bryant, you have anything you want to add to this?
Yeah, because the reason why I sent this article out on the email chain was so that you guys could better understand this is the other side of not the other side, it's part of the Brexit coin, the backstop issue. Okay, because every day in the British House of Commons, not only are they talking about deal, no deal, new deal, they're also talking about the Irish backstop. Because Ireland, basically the South and the North, are basically have been carved in half. There's no official border, but Northern Ireland is a part of the kingdom. Southern Ireland uh, isn't. It's kind of a sovereign state, but kind of not really. Okay, so that's the way it is now. However, if this backstop goes into effect, you basically have legally a part of the EU within the kingdom. That creates many, many problems. Basically, well, not basically, first and foremost, travel and trade and tariffs, which as of right now don't exist. So there are many financial and economic repercussions to if the backstop comes into effect. And this is part of the whole deal, no deal Brexit brouhaha that doesn't get talked about, but it's every bit as valid. So that's why I posted this to let so that everyone can have an understanding that there is more than just the UK leaving, it also affects Ireland because it will literally split the country in half.
Question for you, Paul.
Yes.
If this backstop is okay, worst case scenario, will Southern Ireland try to excuse me, will Southern Ireland try to reincorporate Northern Ireland into a one Ireland state?
They won't be able to because at that point, Southern Ireland will literally still be part of the EU. Northern Ireland is a part of the UK. So the only way Southern Ireland could reintegrate, as you said, Northern Ireland, uh, England would have to basically let that go. And I don't see that happening.
That would never happen.
Exactly. I mean, remember, England fought the Falkland Islands War, which they almost lost over the Falkland Islands, which is a rock that they don't even use, just just to save British pride. They're definitely not going to let Ireland go, Northern Ireland. So now you're going to have when they say there's no hard border, you can travel from north to south. Get in your car and drive. If the backstop comes into effect, you will literally need a passport, and any and all trade from north and south now becomes subject to the very same um, tariffs and taxes that England is actually trying to avoid as a part of their deal. So there are wide-ranging economic factors here.
Yeah, well, you answered a question that I brought up a couple of weeks ago. Who's I was trying to get a handle on the economic fallout, maybe see if it could be traced to a business. Because you start moving borders around and taxing stuff, and it's gonna affect somebody's revenue, somebody's sales, or something is going to be affected.
Yeah.
Basically, I'm looking, trying to figure out how can I profit. Just to cut to the chase. That's what I'm like. Is there an angle here for me to make some money? That's uh, just to be honest. That's the way I'm looking at it.
Absolutely. And you know what? I can't say definitively because I don't know how this is going to turn out. If I was privy to the people pulling the strings behind closed doors, I could have a better answer for you. Right now, the best answer that I can say is we're going to have to wait and see what happens March 29th when Brexit happens. Because I have to think, as the old saying goes, whenever there's blood in the water, there's money to be made somewhere.
I think they're going to extend that 90 days, though.
I've heard that talk. I've heard that talk. I wouldn't be surprised, but then how well is that going to go over with the British people who want this done? Um, Scotland Scotland could potentially be another monkey wrench in the works because it's becoming more and more of an issue in Scotland
Mhm.
as far as leaving Brexit and the Scottish MPs and the Scottish members of the Labour Party versus the Scottish members of the Conservative Party, and they're fighting. So we'll see how this. I don't know. It's a lot of moving parts. It's a mess from every possible angle.
Yeah, I think once Brexit does happen, whether it's hard or soft of an exit, you're going to see the price of goods shoot right through the roof, like in something you've never seen before. This could be catastrophic for for the United Kingdom in terms of doing business. All your common goods that do, I think like maybe over one third of their goods actually come from Europe, whether it's agricultural staples or electronics or vehicles for that matter. There's a lot of Volkswagens, a lot of BMWs inside and Audis inside the United Kingdom. So those cars are going to be affected. The tariffs that will have to go in on it and so on and so forth. it could be very destructive for them.
Yeah, exactly. Because as expensive, excuse me, as expensive as Mercedes and BMWs and even Volkswagens are here, they cost less in Europe because they're not being exported. So even in England, they cost less. But once England leaves the EU, I'm not saying that their tariffs and taxes aren't going to be as high as we have them, but yeah, it's just logical sense. Everything is gonna go up. So how is that going to affect England? And they don't, like as you said, with the agriculture, they get a lot of their agriculture from continental Europe.
Mhm.
A lot of their textiles, a lot of their products, and absolutely the cars. You know, there really is no British car industry anymore. I mean, uh, McLaren, yeah, but most people don't drive McLarens because they can't afford them. Right? And Range Rover is owned by an Indian company. Rolls Royce is owned by BMW, and Bentley's owned by Volkswagen.
And Mini is owned by BMW.
And Mini, yes, thank you. Mini is owned by BMW. So when you're talking British car makers, we're talking what? Morgan and there's a
PPR.
yes, thank you, and Apollo or Gumpert. Either it's the Apollo Gumpert or the Gumpert Apollo, whatever. You're talking small niche manufacturers. I think Rolls Royce Aircraft, which was spun off in the 80s, that's a British company, but they don't make cars. They make jet engines.
Yeah, yeah, their manufacturing sector is tied in with the military industrial complex.
Yeah,
So that's
exactly.
BAE and
Which, which you know what, Mike? You brought up an angle that I haven't looked at in months. Once England leaves the EU, how does that affect Airbus? Because BAE, which is a founding member of Airbus, will no longer be an EU partner.
mhm.
Hmm. I have to look into that.
Yeah, absolutely. Let's jump to the next article. Get this up.
And they're going to be military changes too, right?
Well, they're already doing massive military changes now. They're going into Africa and the Caribbean and recruiting, the millennials to come serve in their army because they don't have enough white men to actually do it.
Also, once Brexit happens, see, as it is right now, you can travel from England to France to Germany to Spain as a free. It's as easy from traveling to England to France to Germany to Spain as easy as it is to travel from New York to Florida to California because it's all one EU. So once that happens, British citizens who are working on continental Europe will technically become illegal aliens because now they don't have work visas because they weren't needed because they were EU citizens, but they will now become British nationals only. So now those people technically will have to literally get on a plane and fly back to England and then apply for work visas to return back to work. And that's thousands of British nationals.
While on the other hand, the Brexit actually allows United Kingdom to kick out all of those foreign nationals themselves, whether they're from
Yes,
India. Even with the Windrush situation, sending all these people from the Caribbean that helped rebuild London after it was torn to shreds by Hitler, by Germany. Um, they're on the risk of being deported themselves, despite the fact that they've been there for the last 75 to 100 years.
but I think by now they're grandfathered in because even my mom, who was born and raised in the West Indies, she can literally she can actually still apply for a British passport. And if if my mom decided tomorrow to get on a plane and move to England, she's grandfathered in. She would be fast tracked for British citizenship and a passport because she was born a citizen of a British colony. So I would think that these people who've
That
been
was that was the case
I,
at one
I
point.
right, I know it's not now. Like, I can't do it. My mom can.
Hmm.
because she was born at the time when she was born, Guyana was still a British colony.
Right, but what I'm saying is that what the United Kingdom was doing with the Windrush situation last year, they were forcing a lot of Caribbean people to leave.
Oh, really?
Yeah, that was a big scandal. They were
Okay.
basically deporting all these people. They didn't have proper citizenship. They never
Mhm.
had paperwork, even
Oh,
though
oh.
despite the fact that they helped rebuild the United Kingdom after World War II, that's where they came from. So they sent all these ships down to the Caribbean to bring all of these black women as nurses and all these black men as laborers. They didn't have enough white men to do the work. Same thing in France and in France and other European states. They brought a lot of Arabs, from yeah, from Africa, a lot of Algerians and Moroccans and whatnot, and Tunisians into the EU to come help rebuild it, and then that's how they got their stake there, and then they ended up getting kicked out at some point.
Got you.
Hmm. Let me read this article real quick. Um, this one is from CryptoBriefing.com. Pennsylvania excludes crypto from the definition of money. As the federal response to cryptocurrency remains stalled, states like Pennsylvania and Wyoming are making their own moves with crypto regulation. And though this approach will most certainly yield a patchwork series of laws and interpret, interpret, interpretations interpretations of laws, it does produce intriguing insights to potential solutions to crypto regulation issues. One such conclusion was reached earlier today by Pennsylvania Department of Banking and Securities, which, following 3 years of delays and numerous inquiries from businesses, produced a clarification regarding the Money Transmission Business Licensing Law, aka Money Transmitter Act of Pennsylvania. According to the DOBS report, this law does not apply to crypto related businesses such as platforms used for trading of virtual currencies and BTC ATMs. Pennsylvania is right on the money. In an unusually brief, to the point, and well structured report, the DOBS was kind enough to provide a detailed definition of money, as set forth by the MTA, as well as explanation concerning the conclusions drawn and the guidance offered. The phrase, quote, medium of exchange currently authorized or adopted by domestic or foreign government, carries the most significance. By itself, it makes it perfectly clear why BTC and its ilk do not make the cut in their current form, since obviously no cryptocurrency has been designated as legal tender by any U.S. or foreign state. From that, from that stems the obvious. Since they are not involved in the business of transmitting fiat currency as defined by the MTA, virtual currency trading platforms are not subject to money transmission license requirements and can therefore freely operate in the state. Furthermore, according to the report, vending machines and virtual currency kiosks are not money transmitter either. So, Lionel, what do you think about this?
Well, adoption in the U.S. has been hard, to say the least, so far in the adoption of cryptocurrencies. Um, the government has not said anything to the point about they beating around the bush, kicking the can down the road. But now you have these two states, Wyoming and Pennsylvania, that makes it easier uh, locally to do business, for cryptocurrency companies to do business, and to trade cryptocurrency and to do whatever you would like to do. It just makes it easier. So this can be a inroad for adoption through the U.S. right now, but that's not to say these laws will be changed or not. But I just saw this article as interesting that since America has been tight-lipped on cryptocurrency in terms of laws and regulations, that there's 2 states that are willing to welcome it, at least per law.
Paul Bryant, you have any insight on cryptocurrencies and being defined as a legal tender?
Yeah, to me, this is real simple. This is a case, excuse me, to me, it's real simple. This is a case of the Federal Reserve pushing back because the Federal Reserve controls the money supply in this country. The Federal Reserve controls the banking industry in this country. The Federal Reserve is not a part of the U.S. government. It is a privately owned bank owned by private citizens. They can't control Bitcoin. That's why they don't want it defined as currency. And one of, I believe, 12 branches of the Federal Reserve System. There's one in Philadelphia, which last time I checked is in the state of Pennsylvania. But I digress. So to me, this is real. This is really simple. If the private citizens who own the Federal Reserve Bank could control Bitcoin, they would have adopted this from day one. Since they cannot, they are doing everything they can by hook or by crook to make sure that this country does not adopt Bitcoin as a fiat currency. To me, it's really simple.
Follow.
Okay, y'all got to make this simple for me. All right, Pennsylvania says crypto is not money. So that means you can't pay a bill to the government. What does that? What are you not allowed to do as a result of Pennsylvania, as a result of Pennsylvania declaring it not money? What are you? I can't give you a cryptocurrency for fixing my car. Just me to you. Is that now like illegal?
No. I think what they're basically saying is that they don't consider it to be legal tender, so therefore there's no real reason why it needs all these specific regulations, right? So it's just not a legal tender. So what's the point of classifying it as money? Whereas most institutions will classify Bitcoin because of its value as some form of as some form of legal tender, and it's really not, because it can't be spent, right? You can go to certain places and use Bitcoin, but it's not. But what they're saying in the article, according to the
what is Pennsylvania saying it is if it's not money?
Say that one more time.
What is it then, in the opinion of Pennsylvania, if it's not money?
It's not. It's nothing. Really, I mean, it's more of just a digital asset, not an actual legal tender.
Okay, so if it's not legal tender and they don't say what it is, they're not going to tax it. I mean,
for the most part, it can be taxed because it's still an asset.
Okay. Okay. So then, and I'm sure. Okay, so they would have. So how would Pennsylvania? I guess the state would. How would they determine the value of the asset?
Well, they look at the charts just like everybody else does.
Okay. Yeah, it's just, I hear you, but it's confusing.
Mm-hmm. Let me get to this next article.
So I'm sorry, one other question. So you basically see this as a I'm trying to connect it to what Lionel was saying. So the fact that Pennsylvania does not consider it money, is that a good thing in terms of are we closer to it being adopted as money
I think because they don't consider it as money, and because they're not going after it like these other states and the rest of America, then that's me, in my opinion, it makes it easier for it to get around in those 2 states.
it will be more attractive. So it could become actually more attractive for people to use as money
Right.
all the unofficial money, as
Right,
opposed since it's been declared not legal money.
right.
Mm.
So it could attract more attention from, uh, let's say, money launderers.
Well,
I mean, would it have? Is that might that be an unintended consequence?
I don't think you're gonna get a response from many of us, but we need to move on to the next article.
Okay.
Next, this next article is from mbcrypto.com. $16 million worth of Ethereum and ERC20 tokens stolen during Cryptopia hack. The year started with a bang as one of the leading exchanges reported a case of cryptocurrency heist that occurred on their platform. The exchange in the spotlight here is Cryptopia, a New Zealand cryptocurrency exchange. The platform released an official statement on January 15th, 2019, stating that they face a security breach which resulted in a significant loss. The platform, however, has still not disclosed details pertaining to tokens that were stolen from the platform and the worth of the tokens. To add on, the announcement stated that the exchange will be under maintenance until the case of the stolen tokens has come to a conclusion. It is currently being taken care of by the New Zealand police officers, and required regulatory authorities have been informed about the incident. Now, a research by Elementis, a next generation blockchain analysis company, outlines the time frame of the heist and total tokens that were lost. The report stated that the funds were moved from the platform's two wallets. One had Ethereum and the other had ERC20 tokens on January 13th, 2019. Sunday, January 13th, 8:28 a.m., funds began moving out of Cryptopia's two core hot wallets, one holding Ether and the other holding tokens. Sunday, January 13th, 11:58 p.m. With the core wallets empty, residual quantities of funds began leaving Cryptopia's 76,000 secondary wallets, a process that would continue for several days. Monday, January 14th, 6 a.m., Cryptopia suspends trading, announcing they are undergoing unscheduled maintenance. Tuesday, January 15th, 3 a.m., Cryptopia discloses the security breach and New Zealand law enforcement steps in. Thursday, January 17th, 5:58 a.m., the last Cryptopia's funds are drained. This was followed by the disclosure of the cryptocurrencies that were stolen. The report stated that Ethereum and ERC20 tokens were worth about a whopping $16 million. It further states that this number was taken into consideration only information found on the Ethereum blockchain. The funds were taken from more than 76,000 different wallets, none of them which were smart contracts. The thieves must have gained access to not one private key, but thousands of them. It seems Cryptopia not only lost their funds, but they lost access to nearly all of their 76,000 Ethereum wallets. The largest amount of cryptocurrencies that were stolen was Ethereum, Dentacoin, Oyster Pearl, Lisk, ML, Centrality, Mothership, Ormeus, DApps, Zap, and Pillar. What do you think about this, Lionel?
Um, Another rule in crypto is don't keep your funds on exchanges because throughout the years they've been proven over and over again to be hacked, to get hacked. Beginning with Mt. Gox in I think 2014. Last year there was a Japanese exchange lost 500 million in a hack. You got Cryptopia that's estimated to be around 16 million. Don't keep your crypto on exchanges. The It seems like per this article, the coins that were taken were ERC20 tokens. So if you hit any ERC20 tokens on Cryptopia, the chances are that they were stolen. Um,
Question:
yeah.
If you if you keep your tokens on the exchange, why do people do that? Just to be able to trade faster?
Laziness, uh, convenience. They don't trust themselves.
When you
Uh,
say convenience, how is it convenient?
Going through the process of downloading that crypto's wallet on your computer and having control of your own funds. They don't trust themselves, so it's more convenient to have it on the exchange. Um, yeah,
So they would basically treat the exchange like a broker,
yeah, and a
the
wallet.
way we would leave our money in a stockbroker account. They would
Yes,
just leave it in the exchange's account. Okay.
right. And there have been uh, people people say, don't if you don't control it, it's not yours. Don't leave it on the exchange. But people don't listen. Uh, that's that's one of the reasons we need regulation. Custody solutions. You see, Coinbase and Gemini have custody solutions, cold storage, this, so forth, so forth. Um, so this is, for me, one reason why crypto is not ready for mainstream adoption. One reason, not the reason, because most people that are maybe want to go into this, they don't want to be dealing with wallets on computers and having control of their own funds because they're not used to that. So now that you're telling them you can do this, yeah, they may be fine and dandy, but a lot of people may not want that. They may say it. They may say, "Oh, down with big government and all this and all that," but when it come down to the come down, they don't want it.
You don't want that smoke?
They don't. They do not want this crypto smoke.
So we need insurance.
Insurance. We need regulation in this, as they say, nascent asset class. We need regulation. We need these things because even the the most staunch supporters of Bitcoin that's been there since day one, when Satoshi released a white paper and talked to Satoshi, even they get hacked. So you can't say, oh, no regulation, no this. No, if you want this to go to 60, 70, $80,000, you need some type of insurance, some type of regulation, some type of knowing that, hey, if this happens, you can call somebody up and get your money back.
See,
And when the flow increases, or when the market cap goes higher, the thefts are going to go up.
The thefts is going up at a low market cap and a higher market. You know it's going to go up when the market cap increases. Scams are going to go up.
Well, I think when the amount is higher, you're going to get better quality thieves.
Yeah.
More skilled thieves.
The problem that I have with all excuse me, the problem that I have with all of this is the ease with which people can hack things. It seems like literally nothing is safe. If you're telling me that the DoD can be hacked, and you're telling me I was naive in believing that that the DoD and militaries and top line governments are totally safe from being hacked, but they're not. If anything can be hacked, that includes this. And that, for me, is a major red flag for me to stay away because you're telling me there's no security. Because, yes, any bank can be robbed, but what you're telling me is that I have no security with these cryptocurrencies from being hacked. If I put my money in a bank, I'm sleeping safe at night because I know that bank's not getting robbed. And worst case scenario, If that bank gets robbed, guess what? Thanks to the FDIC, I'm still going to get my money. With this cryptocurrency, anything can be hacked and it's gone forever, like a
Yeah.
fart in the wind. And
Yep.
I do not feel any safety or security when you're telling me that anything can be hacked, especially cryptocurrencies. Now, is it just me showing my age? Am I exhibiting undue anxiety? Help me wrap my brain around this.
I agree with you, and I am a millennial. I agree with you. No one wants their things taken, their money taken, and feel helpless in terms of you can't be helped, especially people that want to get in this and they're not technology savvy. They can't track down. Oh, somebody stole my money, so I'm going to track them down.
Lionel, are you there?
You want mainstream adoption. It's crazy. Um, People want to be secure. People want to invest and have security in invest and say if something happened, we got your back. Call us and we got your back. That is what is going to help people feel comfortable and secure and to put thousands of dollars in this asset class.
Which, coming back to the article that we discussed maybe two or three articles back, um, even as much as the Federal Reserve is they're evil bastards and monsters, you know, there is some form of safety and security in the established fiat currency that we have. With these cryptocurrencies, there's nothing.
Nope.
I mean, you might as well hop on a plane and go to Vegas and just gamble. Again, if I'm seeing this wrong, help me wrap my brain around it.
I mean, you got you when you say you just want to as an investor, if you invest in this, you want to feel secure. You want to feel you want to know that if something happens, you have a good possibility of getting it back. You are absolutely right.
See,
Well,
it's
they don't seem to have too much of a problem playing the playing lottery tickets and scratch tickets, and they don't get their money back from that.
Yeah.
well, well, I wasn't saying as what I'm saying is help from my understanding,
Hmm.
a cryptocurrency is supposed to act like any currently existing fiat currency. If I place it in a secure location, in the case of a fiat currency, it's a bank. I can sleep at night. I'm not worrying about someone sitting at a keyboard and hacking in and taking my money and it's gone, never to be seen again. Okay, so if you're telling me that cryptocurrency is supposed to be another currency, then am I incorrect in having the assumption that my funds, if I place them in a secure location in the cryptocurrency form of a bank, whatever form that may be, that I can sleep at night and not worry about my funds being gone? If I'm making myself clear.
Yeah,
Now,
absolutely.
yeah. Now, right now, since crypto is still young, it's only 10 years old. Um, there are unwritten rules to how to go about in protecting yourself. One of them is don't keep your funds on the exchange. Don't tell nobody you own crypto. So for the because you are in control of your money, you are in possession of everything. So it's not like okay, somebody can stick you up and say, "Well, we about to go to the bank and get you." No. So there are unwritten rules, but still, for mainstream adoption and for more and more people to invest in this, there still needs to be some type of security to instill in those people to say, hey, if you invest in this, you'll be all right if something happens.
Okay, and I'm not saying I'm against the cryptocurrency. I'm not. I am an absolute wholesale believer in new technology. My only concern are the security concerns. That's my concern. I'm not against the cryptocurrency.
Yeah.
Let me hit this last article, and then we can have open mic. All right, this one is from Investopedia.com. 10 U.S. stocks swayed by Brexit. 10 U.S. stocks have a lot riding on the UK leaving the EU after a deal is reached, according to Goldman Sachs. In a research note, analysts at the investment bank said those 10 companies have the biggest revenue exposure to the UK, generating upwards of 15% of their sales from there. The stocks are Newmount Mining Corp, Pabina Pipeline Corp, Affiliated Managers Group, Willis Towers Watson PLC, Invesco, News Corp, LKQ Corp, Bank of New York Mellon Corp, I think that's BNY, MSCI, CBRE, CB Richard Ellis. Newmount Mining was identified as the company with the most at stake, with 3/4 of its sales coming from the British Isles. Outperformance for some shares. Last year, Goldman Sachs noted that U.S. stocks with highest share of UK sales lagged domestic facing stocks by more than 1,000 basis points between January and mid-December. Analysts expect these same companies to continue to be affected by the current uncertainty surrounding Britain's plan to leave the European Union after Prime Minister Theresa May's Brexit deal was rejected by British Parliament. Since the delay of the Brexit vote on December 10th, Goldman said UK-facing U.S. stocks have outperformed the rest of the S&P 500 index by 190 basis points. Analysts then went on to predict, quote, potential for further upside if a clear path forward emerges. 50-50 chance of delay. According to Goldman economists, there is now 50% chance that Brexit will be delayed and eventually concluded with closer ties to the EU. Such a scenario, they point out, would benefit U.S. stocks to do business with their UK counterparts. What do you think about this, Paul Bryant?
Yeah, it's pretty self-explanatory. You know, I was a little bit surprised by Bank of New York, but I I read years ago that Bank of New York has ties to the Rothschilds. I find that of interest, but yeah. So we're seeing we're seeing we're seeing the global effect. I did not think that Brexit would directly affect U.S. companies, but apparently so. So it's going to be of interest to see how things shake out. I'm a little bit surprised at News Corp because Rupert Murdoch is Australian. He's not British, but it is News Corp.
Mm-hmm.
I really don't have much more to add.
Mm-hmm. I know you sent this, so what do you think?
Well, I saw this interesting because I know Donald Will mentioned it last week. Came up with the question: what stocks are ADR stocks that will be affected by Brexit? So I saw this, so I put it on the docket.
Yeah, I was interested in this also when I saw that. Of course, we were just talking about gold, and the first company they mentioned was Newmont Mining. And I'm reading on bar charts in the description. It says Newmont Mining Corporation is primarily a gold producer with significant operations and/or assets in the United States, Australia, Peru, Ghana, and Suriname. Newmont is also engaged in the production of copper, principally through Boddington in Australia and Phoenix in the United States. Newmont's corporate headquarters are in Greenwich Village, Colorado. So that's why I like gold. If I can't trade gold, I can't be dollar will, y'all. You got to let me trade gold.
Newmont Mining is not a excuse me. Newmont Mining is not a Dow 30, but it is one of the it was one of the Dow staples in the mining of in the mining sector. So they're a large player in that sector.
They got their hands all over the world from that list, from Peru to Ghana to Australia,
Yeah.
to the United States. Yeah, they digging all over.
They are in the mining sector what U.S. Steel was, an absolute whale in the industry.
This is open mic, so you guys can put the script and talk about something else.
What we got in the chat? Let's see. Carl says, I invested a small amount of USD into Turkish lira, and I watched the exchange rate, but it hasn't changed much in the last 2 to 3 months. 2 to 3 months. Wow, that's pretty an exotic pair there.
I wouldn't expect there to be much movement in Turkish currency, but maybe he knows something that, again, not saying that I would watch it, but I've never known that currency to be an investment vehicle. So, all right, I guess so.
Nope, I have no history with the lira, the dollar versus the lira, but we can take a look at it.
The lira spiraled out of control when the United States put sanctions on Turkey.
That it did.
So once the United States put those sanctions on Turkey for the S-400 deal, it sent the lira crashing overnight. It showed how fragile the lira was. So lira is not something I would invest in at all at this point. I mean, I don't see the value in it. It was strong. It was strong at one point when they were completely allied with the United States, but they're not. They're no longer completely allied with the U.S. So it really doesn't have any value since it's not. Turkey is not some mass producer of a certain good that the United States is dependent on. In fact, Turkey does less business with the United States than they do with the EU. I think they do something like $80 billion with the EU, in Germany in particular, in comparison to the United States, which they do less than $7 billion a year. So they really don't need the United States to survive. There's technological differences, advantages of being allied with the United States, but there's no dependencies on the United States, so to speak. A lot of their money is coming from other places that does not include Uncle Sam. So Turkey will be just fine. I don't see the value in the lira right now, especially with the way things are going. And if things play out well, I mean, then so be it. But Turkey is no major superpower to be worried about. I only worry about a few currencies: USD, Swiss franc, and the yuan, as well as the pound. I don't see any value in the EU. So I throw in the EU as well, the euro. So, but outside of that, I don't see any value in the lira.
Yeah, Carl, I'm sorry. One other thing, Carl, if you're there, just to be clear for you, it sounds like you're long. Can you confirm whether you're long or short trading this pair? Because I'm looking at it on the chart right now. Are you long or short, Camilla? Tell me what y'all. Oh, you guys go ahead. I'll wait. I'll watch. I'll stake them out and see what his response is.
Yeah, and Turkey didn't go through the economic nuclear meltdown that Greece did, but it wasn't that far behind. So I would want to tend to stay away right now. As Mike said, they don't have a robust manufacturing and production sector.
Well, let me give a trader response. As a trader, we trade both ways. So we'll look for the volatility. We'll look for the action. We don't really care whether if it's moving up, we'll be bullish. If it's falling like a knife, we'll short it and make that money. And my bias is long, strong dollar, and so that would put me on the bearish side of the equation for anything paired with the dollar. So I'm looking at let me try to pull this up. It's really not a whole lot to say about it other than just why talk in the abstract about it when we got the technology to let you see it.
Oh, we have the technology.
We have the technology.
We can build the world's first $6 million man.
You guys can see this? Can you see it?
Yes.
Okay. Of course, I like to go way out on these long quarterly charts. And I am of the opinion, it's not a very popular opinion, that the dollar has not topped. I don't look very good right now in this opinion because gold won't die. Hasn't died yet, but it's gonna. Going down to the monthly, we got weakness here that corresponds with this peak, and we're going down to. So we got this big candlestick here. I think it's going to continue weaken and continue to go down. So I would be looking for a position to short this. I would not be long. I wouldn't be long the mirror. That's kind of vague. I don't know what this could end up going the other way. This looks like a sideways consolidation for continuation move down. Judging from the bigger time frames. We still got some. Whoa, my computer went out on me. Hold on.
Better call Apple.
No, my daggone it's done some wild stuff. Like it log, like my screensaver pops up while I'm working on the daggone computer. I'm like, what's up with that?
You ain't doing no work.
It could be.
You gonna spend that $300 for that Apple extended service warranty contract?
But basically, I would short this. Okay, I would put a trend line here, and I would stay short. It would have to prove it. It would have to violate the trend line from here to here. It would have to violate it to the upside for me to give up my short position, which I don't think it's going to do. This low is back in November 29th. So that's we'll see. We'll see. I mean, I'd be looking for this area right in here, see if it made a new low here. But I believe that the dollar is going higher. This interest rate cycle, I don't think we've seen the peak in the interest rate hike for the dollar, and I would not bet anything that would put me betting against the dollar. So that means I would not be long the euro. I wouldn't be long the Swiss franc. I wouldn't be long gold right now. That's just my opinion on that. So I'll release the share.
That was some good fundamental analysis. Very solid.
Well, you guys gave the fundamental. I added the technical.
Just jokes.
I hear you. But for people out there that maybe get the two confused, basically, if the information is something that an accountant would be concerned with, that's more on the line on the side of fundamental analysis. If it's contained to the charts, the price chart, that's technical. It's all in. It's just all technical analysis is confined to the chart.
Here's something we were supposed to go over last week for the agritech hangout, cannabis hangout. 4 marijuana stocks making new highs on latest headlines. This is probably dated by this point, but I'll read it anyways. Marijuana stocks have become one of the hottest topics in the news over the course of the past years, but the last few weeks have remained especially positive in the industry with the introduction of the U.S. Farm Bill and the advent of legal hemp. Cannabis stocks have seen impressive gains over the last month or so, with no signs of slowing down following the increase of capital and influx of consumer interest entering the market. The cannabis sector has shown exciting promise in the terms of opportunities for investors looking to the space. With the end of January only a few weeks away, Premier Health Group, PHGRF, Mary Red Inc., or Mari Med Inc., Constellation Brands, and Trulieve Cannabis Corp. are four-part stocks looking to be top contenders this week. Premier Health Group. Dollar Will, can you pull up some of these? If you don't mind, you can pull up the chart for these. I think
I'm sorry. What? Give me
Uh,
one or two. Give me one first. While I can.
PHGRF.
PH.
PHGRF has seen impressive growth throughout the last few weeks of January as the cannabis sector has garnered significant notoriety as well as major increase in public support. Recently, Premier has been largely focusing its efforts on investing in opportunities that combine healthcare and cannabis to develop a cohesive business model. Earlier this week, Premier Health Group announced that as part of its international expansion strategy, it has entered into a strategic partnership with China's 360 Health, a healthcare subsidiary of 360 Security Technology. The parent company, 360 Security Technology, is leading online service company in China with a market capitalization of over $20 billion USD as of January 16, 2019. As part of the collaboration, Premier and 360 Health will implement an infrastructure whereby Premier will be providing second opinion services by connecting 360 Health's patients in China with doctors in Canada, both remotely and in person. Premier will also assist with general practitioner training virtually and on site through medical seminars. In response to this announcement, Dr. Hamza, CEO of Premier, said, quote, "We are very excited to be working with 360 Health, and China continues to adopt a family practice primary care model and look forward to helping them establish themselves as a leader in primary care." So that's one. And then Dollar Will, let me know when you're ready to share your screen so I can stop sharing mine.
My mic was out. I was just talking. Sure. Am I sharing screen now?
You are.
Okay. This one, PHGRF, it's not enough information. I wouldn't touch it. For me, I'm not saying it's not worthy of investing. I'm just saying I just have my own rules, and I don't like touching stuff that's I don't have enough data. I don't have a this. This only goes back to uh, the end of October, and for me, that's not enough. That I remember. I had the same opinion about there was some cryptocurrencies way back, and I said I wouldn't touch it. I just need to see more data, more chart information. And so, what's another one?
Let me grab the other one. Mari Med.
They don't have a symbol.
Let me grab it.
Molly Med.
Oh, MRMD. Mari Med.
Merriman.
A leading multi-state cannabis operator announced earlier this week with the formation of Mari Med Hemp Incorporated, a wholly owned subsidiary to be entirely focused on hemp-derived CBD products. Per the announcement, the new subsidiary will have a dedicated executive team, proprietary brand and product line, and distribution and market relationships, all separate from Mari Med's core cannabis business.
This one looks interesting because it looks like it had a nice little devastating pullback from October to Christmas Eve. We got an ABC pattern here, and sure enough, it's more than likely going to go above this. So this why I would have interest in if I was, trying to take a position on this.
Mm-hmm.
Yeah. This candlestick here is kind of weird. It's not a convincing lower low because it's not like enough, a lot of volume in that. You don't see the red part of the candlestick getting fat. So this fatness means it was a lot of action, a lot of trading at these price points. So although it made a lower low here and a higher high, so if this was red, we would call this a bearish engulfing candlestick, and that would not be a positive move. But this doesn't look convincingly negative. Okay, I would not be thrown off by it. Let me look at something. Look at 60 minutes. Break it down to like an hour. See, yeah, this is interesting. It's like, okay, so you got this long shadow here, but it looks like okay, so the price dropped here, but then the volume fell off going down here. So it wasn't a lot of people selling when you see this long wick. So the convincing move is really just from here to here. That's the, like, quote unquote, the real move where you got a lot of participation in the sales. Wasn't as many people selling during that wick part. So I don't know. I would not shy away from this. This one might not be a bad move. But I would put a stop loss and not trail it. I'd watch it. I wouldn't, none of this stuff I set and forget. But just looking from the look of that this retrace here, I think it's continuing higher. And so what is the story with them? What's their angle? What's the fundamental argument for buying Merriman?
Oh, they're basically focusing on CBD based products from hemp.
Okay.
The third one should be
and also look at this, is looking at the monthly scale. It's like the biggest green volume, the biggest green volume bars are here. So that would mean that the most vigorous buy of this has been in recent times. So there's interest. These big green candlesticks, that means more money. So there's more money been coming into it recently, which has driven this price up. So you got volume, higher volume supporting this rise up, and it's significant comparing to the past. Significant increase in volume. But go ahead. What's
Now,
it?
just Constellation Brands STZ.
STC. This is the beer company with the weed beer.
Yeah, I think they own Corona, if I remember correctly.
Okay. This one, I need to see my stochastic for this. The only issue with this is just a matter of how of if this is the bottom for this. But this is the season to buy beer and beverages. This is the period for that, you know. And so the key is, will it make a? This looks pretty good. Now, just as a a quick view, that looks good to me. You got the peak here. You can even see the ABC pattern here in the stochastic, and that looks good. I would put a trusted trend line there. I would need to see a convincing green bar that would dominate this big red one here. So I have to see some breakout above this, but it looks good. It looks good, and it didn't make a lower low from this leg here. And on the weekly chart, we're over sold. Looks good, yeah. So you get to buy it now for about what you would have paid for it in, this is March of 2017. Wow. Okay. So you're almost 2 years worth of a price discount. Okay. And so this decline started in April. So a decline from April of this year to this month, pretty nice little haircut. This looks good. This looks good to go. But a breakout above this red candlestick right here would really be more convincing. Let me see. Put a trend line here. I think it looks like it's sitting on it. So when all else fails, you just put daggone trend line on it. And you make this. We can make this stuff complicated, but it's sitting right on it. So you got the price sitting right on the trend line. You got the stochastic showing that, of course, we were at over sold now. So in all likelihood, this oscillator is going to move higher, forcing the price to break the trend line. So yeah, so you got this trend line here, and you can put a horizontal above that red candlestick. But yeah, I would be okay with buying it even right here. But I would just look to see that it doesn't make a lower low with each candlestick. But yeah, this looks good.
So the last stock would be Trulieve Cannabis Corp.
I'm sorry, just because of personal reason, but because Constellation is one of them I'm following. What's the particular news about Constellation?
Oh, Constellation basically invested into cannabis. I believe they're trying to make a beer out of cannabis as well.
Oh, this thing went even more. So yeah, this this is a good. I feel I would be safe in my call that this is the bottom, but I will still watch it. But yeah, this is pretty good point to get in. I'm sorry, you said they bought what?
They're invested into cannabis.
Right. Okay. Yeah. When is this weed beer supposed to come out?
Who knows? The last one is Trulieve Cannabis Corp. TCNNF. Stock ticker.
You say P or T?
T as in Tango, C as in Charlie, N as in Nancy, N as in Nancy, F as in Fox, or Frank.
Over the counter. That means it's very, very small. Very thinly traded, very small. What do we got? Only back to September. This is another one of those examples. Over the counter stocks is not my thing. So I can't really call it a penny stock because it's, what is it, $9? So it's not a penny, but it is thinly traded, being an over the counter stock. Sometimes these stocks, it can be a little difficult to get your order filled. It may not have a lot of activity going. But these over the counter stocks is not my thing. So I would say if somebody wanted to get in, you would have to just make sure, as long as it's making a higher high right now, it could go either way right now. It could go either way. I mean, so in a case like this, if I was determined, because I have the time, okay, I have the time to sit at home and watch my chart, okay. But if I was to buy this right now and I wasn't sure what direction it would go, I would take a position right now and just put me a close stop below this low. That way, if I'm wrong, I get out. Because if I got to go to work, I don't want to be sitting here worrying about what this thing is going to do, okay. So, right at this point, it's not. Let me look on the stochastic.
187,000 daily volume on a pink sheet stock? I don't know, bro. That is a major red flag.
Are you saying just the volume is low?
Yeah, plus it's a pink sheet, man. I don't
Right. I don't mess with
know,
them.
bro. I stay away from pink sheets, man. I mean
Now,
that's
again, I'm not saying that it depends. You know what? I'm saying this is my thing. I don't mess with them. And Paul is saying he doesn't apparently trade them. But I'm not representing that you can't make money at this stuff. But for me, my question is why? There are too many other stocks out there that trade that have uh, uh, let's see, a good heavy volume. So there's no risk of the thing just going, falling off the map that day. Strange things happen to stocks that are thinly traded. It's too many people can easily manipulate the price movement. But
you can make money on pink sheets, man. But I mean, we're talking, you throw $200-300 on a trade, maybe $500 or $600 on a trade. You maybe make a quick 200 or 300 on a day if you're riding the volume wave. Now we're talking strictly fundamental, reading the tea leaves. What the hairs in the back of your neck are saying to you. I don't, that's they're pink sheet stocks, right?
yeah,
That's pure. That's pure gambling.
yeah. See, another reason I don't like it is, like I said, I don't like stuff where I don't have a lot of information. This only goes back to September. I like, give me a year, a couple of years. Give me so I can see some swings from overbought to oversold. I'm looking on the daily chart. It's overbought. Now, it doesn't mean that it has to come all the way over. So right now, sometimes it can go halfway and go. I just like more information. Now that's a 5 minute. Let me look at it on like a 4 hour. Yeah. See, like I said, if you want to buy this kind of stuff, You got to watch it. You definitely got to use your stop losses, and you got to watch it. I don't like messing with them. But what was another other one, Mike?
That was it. That was the top four for 2019 to look out for.
Oh, okay. Yeah, I'm wondering why that person put a pink sheet stock on. What was the justification in the article for why this one? Something is thinly traded is this. What was this justification in the article? What's special about this company?
Um, it just says the extension of the lockup period is indicative of confidence that the company founders have in vision and execution of our corporate strategy as we continue with our efforts to bring high quality products, industry leading customer service to multiple cannabis markets across the U.S. with the goal of increasing shareholder value
I
through
tell
all.
you what, I think Paul would agree with me on this. If the investing world thought a lot of this company, it wouldn't be on the pink sheets.
Absolutely not. I understand that this is definitely an emerging market. It's a hot market.
Mhm.
So why are they still on the pink sheets? If that price is going to be so low, that's not necessarily a barrier to entry to the Nasdaq. It could just as easily trade at that low price on the Nasdaq. Just because you're under $5 doesn't automatically put you onto the pink sheets. It's more things like trading volume and market cap. There's several criteria, but
Okay, I'm using this term pink sheets. I need to look it up. Or it's a small. I can't even really. What can we even call it an exchange? What do they call a bulletin board stock? So what is that, Paul? Is it physically what it is? Is it? It's not. Is it an exchange? What is it?
no, it doesn't it doesn't it doesn't meet the NASD's requirements to trade on the New York Stock Exchange or on the Nasdaq. So it's what they call a bulletin board stock, a pink
Right.
stock, a um, penny stock. The market cap is low. The trading volume is low. The price is extremely low. I think it's what don't quote me. It's been a long time. If the trading price doesn't break either $5 or $3 for I think it's 6 months or 12 months, plus an extremely small market cap, plus extremely thin trading volume,
Right.
boom, you're going to land yourself on the pink sheets. Because a long time ago, all these bulletin board stocks were actually printed on pink sheets of paper. That's where that term came from. So
Yeah, like some of these companies just were actually some were actually kicked off the Nasdaq or the New York Stock Exchange, and others were too small to ever qualify to get on a quote real exchange.
correct. Now, the worst case is when you were traded on either the New York Stock Exchange or the Nasdaq, and then you got kicked off. That's pretty much the end of you. But
Right.
that's a whole other conversation entirely.
Yeah, like that
But
happens with a lot of banks during the bank crisis.
no,
It fell off, and that happened also with a lot of shipping companies. Okay, they fell off the market.
no. I'm not trying to trash this company for anyone who's listening,
Right.
because 3 to 6 months from now, this company right here could very well be in the middle of something big. I'm just saying, me personally, again, um, seek out a registered financial professional, which I am not. That's a past life for me, but I would not touch this at the moment unless you have the time, as Dollar Will said, to sit in front of your screen and watch this. This is this is pure. This is just sitting in front of your screen and watching it for an hour, 2 hours. You you see you see some volume. You ride the wave. Get in, get out.
You know another thing I don't like about this? It's $9. Okay, if I'm gonna spend $9 a share, I'm not gonna spend that amount of money on a pink sheet. I will equate bulletin board stocks, quote unquote pink sheet stocks, to what we call them shit coins. Okay, and just like you spend like fractions of a penny or a penny for a shit coin, that's about how much I want to spend for a bulletin board stock or something that's not on the NASDAQ or New York Stock Exchange.
You know what? I'll say this.
I'm not spending $9 for something that's not good enough to be on a real exchange.
When I was in the business in my past life, a few of my colleagues, they would trade their own account when they had the time, because they really had the time to trade their own account. But the guys who did it, they were literally degenerate gamblers. All right, they'd call down to the trading floor. They trade their account, but as I said, they were putting $500, $1,000 or $2,000, $3,000 or $4,000. Watch it, hour, 2 hours, 3 hours. It'd move 25 cents, 75 cents, 80 cents. Get out, get in, get out. That's as far as trading pink sheets. I've never done it. I never will. I've never seen the point to it. It's pure gambling, unless you happen to be aware of some news on it.
All right. I just want to take a look at Bitcoin. We just kind of have to look at Bitcoin. I don't have no faith in this thing. I'm just wondering when is it gonna break this? Let me go to a bigger. I don't trust it. But when you see these small candlesticks, it's getting tinier and tinier. That's telling you that the range is getting narrow. Like the difference between the high and the low is very narrow. You see here, it got very narrow, then a big move. Now, it can move either way, but this looks pretty narrow to me. Something's about to happen. This range is too small. Let's see, my screen freaked out on me again. Okay, yeah. So that's one thing. And this is on a weekly chart. So this we've had this narrow, puny range. Look at the high, 35, 81, 74. The low is 35, 62, 18. Pretty narrow range for a week. Puny. So I'm of the opinion that this thing is going down, but we'll see. I'm gonna trust this monthly stochastic. I'm in no hurry to jump on Bitcoin. Okay, there'll be plenty of time. I say I'll see something. Look, I'm not trying. I'm too old. I don't try to catch the exact bottom on things. Okay. So I like to see a bottom come in, especially something that's been falling for a long time. Let a bottom come in, let it go sideways for a while, let it, So usually what I'm looking to see is something green on like a weekly or maybe even a monthly chart. Because with this amount of devastation, I want to be sure. Because when I get in, I'm likely going to stay there, for a minute. So there's your Bitcoin. There's nothing exciting about it. Nobody's talking about it. Wall Street abandoning them like a red-headed stepchild. But it's right on that line from the top. We'll see. What else you guys want to see? Nothing else really exciting me outside of gold is looking very, I'm anti-gold, but I cannot argue against the strength.
Paul, did you have anything in particular you want to bring up?
General Motors. curious for dollar world GM.
Okay. All right. Give me some colorful charts here. Give me. Well, I know I'm gonna have enough chart data for this one. That won't be a problem. Okay, I like to start out. Oh wow, it's amazing. What's up, bar charts? You're only giving me back to 2011. Okay, good month. Haven't taken out the previous good quarter. I mean, we're on the quarterly charts, but haven't taken out the previous quarter. Let me look at my stochastic. Okay, that's on the daily. Okay, we are overbought on the daily by the stochastic. Let me look at some other time frames. Okay, that could still be going higher according to the weekly. Okay, strong month. Didn't take out the previous high though, but this looks pretty good. You're getting some conflicting information here. Now, when I see something like this where it looks pretty convincing, say on the monthly chart, okay, looks like, hey, might be a decent time. Although this didn't make a higher high, it could be, it could make someone be encouraged by this. So if I'm trying to have a long bias, I'm not going to buy it when it's overbought. Okay. So although I like the fact that it had a trough here, it went from oversold to overbought, then back to oversold, and we made a higher high in the price. I mean, a higher low in the price. And maybe it will make a higher high. So that's all encouraging. But I'm still not going to buy it until it would have to come down and get over sold again without making a lower low. So I would sit and wait for this daily chart to come back down to the oversold and see how that affects this low. Does it make a higher low? If it made a higher low again, that could encourage me. So if we went from oversold to overbought to oversold without making a new low, that would be three higher, a low, three steps up, a higher low and a higher low. I would see a sequence now. I got three in the series. That would be encouraging, and I would consider buying at that point, and absolutely getting out if it ever fell below here. So if it fell to here and we went to oversold, I'd consider getting in, and I would get out if it went through here, or even actually anywhere in here, I'd probably get out. But for me right now, I would be in watch mode for this. I'd be in watch mode to see if it once we go back to oversold, what happens to the price? Do we make a lower low? Okay. With all that bad news we've been reading, it's kind of hard, to convince yourself to go long General Motors. From the what we know about stronger dollar, the slowing economy, General Motors actually, and it didn't make a higher high right here. So this would be a candidate for shorting it right now, taking a short position right now. Hold on.
Okay. Well, Dollar Will, could you look up VAG? I think, or Volkswagen Automotive Group. I think that's what it might be.
Okay.
VWOA.
Okay, let me say.
Yeah, so this would be Ford and Chrysler.
Okay, let me just say this would be.
What was that, Paul Bryant?
I was about to ask about Ford and Chrysler.
Oh, okay. Go right ahead.
Let me just finish this point. So this would be just being logical about this, at this point, it would be a good candidate for shorting right here. But watching it, I'm not. None of this is like we're talking trader now, trader mindset. We're not talking investing. We're talking trading.
Right.
You're gonna watch what this thing does. So this would be a candidate for shorting it right here. And if it made a lower low, right? If it went lower than this, you're feeling pretty good. If it went lower than this, oh, you feeling great because you're making money all the way. And then you just sit back and feel pretty smart because you shorted it way up here, and you're like, you hate to say it, but you're rooting for the thing to keep falling at that point. So you said forward, but like I said, you can begin shorting it, and if it made a higher low, then you can switch and go long. But you're watching it. You're not walking away from this. This is trading we're talking, not investing.
Right.
Okay, we see the same kind of thing. It made a lower low, but it didn't make a higher high. So similar kind of thing. Let's see. Let me look at it on go to like an hour or something. See, all right, so we got this peak here, and we're looking at an hour chart over so swing the oscillator went back up to overbought. We didn't make a new high, so basically we got out. Looks like we got our little ABC retrace here, and we didn't make a higher high. I wouldn't trust this either.
All right. So what about Chrysler? It's either FCA or FCX, I believe.
I'm sorry, you said F. Is it F? You said?
Yeah, I believe it's either FCA right there. Fiat Chrysler. Yeah,
Oh,
change.
Fiat Chrysler. Gotcha. Okay.
Yeah, keeps on changing.
What did I just read about them recently? Something in the news.
Yeah, well, Fiat bought Chrysler a few years back.
I just saw something about them.
Actually, there's rumors about them being sold off to the Chinese.
Who the Chrysler division?
Yeah.
You know what? Chrysler, ever since they were spit out by Daimler Benz, that company has been company has been to hell and back.
Yeah. Okay, I'm just using this horizontal line here to help me see if it makes a lower low. Because that's one low, went a little lower, came back up, made another low, spring back up. So what I like to do is I look at, okay, this is the low, then what's the highest point after that? It's here. What's the lowest point in this swing low? Here. What's the highest point? There. And what's the lowest point? Here. So this is the significant high that matters. So for me, it would have to do two things. It would have to make a higher high, and I still would wait, even if it made a higher high, for it to get oversold. But this doesn't look any better than the other ones. So I wouldn't buy this now either. I would wait to see if it's it would have to get oversold. And I'm looking at it on the daily chart right now. I don't trust this one either.
Which kind of matches up with everything that we've been hearing for the past 12 to 18 months. The U.S. automakers market is soft.
Right. Now, although it looks like it did kind of break the trend line, but I don't trust it. We'll see. Again, for me, it would have to get over sold, and then I'll see where it is. Okay, if this energy made the price move up this much, when the momentum starts going south, I want to see if the sell pressure south is greater. So if it should be, the sell pressure. If this is a continuation of the downtrend, there's the pressure selling should be greater than this little recovery right here, which didn't make a higher high. So I wouldn't buy it just because it, broke out and looked like it danced around the resistance. It would catch my attention, but I'm still waiting for it to get over sold. I don't trust it. So two things would have to happen. One, it would have to go above this, and then it would have to get oversold. So all of that, all these extra rules I put in stops me from like jumping in too early. I'm not trying. When I started out, I used to try to guess the bottom. I'm past that now. I'll wait. You can go simple to something like, that's why I like looking at the longer charts, because it takes all that daily information out, stuff that doesn't matter. I mean, if you can wipe out, what's this? This would be like five candlesticks. That's like, over a month. You get enough buying pressure to take this out, and you might be doing something. Now, okay, so we make a higher high here, and we have this oscillator on a weekly oscillator still looking strong. That might get my attention. But it would have to make this higher high. And on this daily chart, and it's already flipped. Okay, so the fast line is the orange. It's already flipped. So if this thing is going higher, this orange would end up going above this blue on the oscillator. That would, show that the strength is still going. So we were already 94 on this scale, or at least this peak was. Anything over 80 is overbought. So you just put it on your, on your list to watch it, see how it does. But this is the significant peak. So what was another one? They probably all look about the same. What's the other one? So this is.
It was Volkswagen. Volkswagen.
VW.
So it should be like VAG.
VAG.
No, it should
I was
be.
gonna say, I don't remember it being VAG.
VWOA.
I didn't know they traded ADRs in the U.S.
Let me type in the word VOL.
Okay.
Volkswagen. Let me look for. See, this is over the counter U.S.
Ooh.
I'm looking for something that says, stock American U.S. NASDAQ or American Stock Exchange. Don't see nothing. I guess this might be the best we're gonna get. There's your ADR.
Yeah, but that's not really
Not a major exchange.
not really.
I think that can't be true. Maybe it's just this bar chart site doesn't show it. I can't imagine that Volkswagen is not on a major exchange.
Well, I'm sure it's on the German DAX, but that's not really going to help us out.
Right, but we can see a chart. Let's see. Well, wait a minute. Which one is that here? What's the BXE? What's that? Let's see. Okay, so this is a significant peak we're talking about. This is interesting. It could. Now, I can see some technical traders saying, okay, we got to reverse head and shoulders. Okay, we got a left shoulder here. That would be the head. That would be the right shoulder. And this is the highest point between the two shoulders. And so anybody that's optimistic about this stock would be looking to see if it broke above this. So that would a break above this candlestick here, 159.94. That would set off technical alarms, because you're talking about, you can really kind of see all of this as one long channel sideways, really going all the way back to June of 2018. So that would be a pretty bullish move for Volkswagen to break out of this long sideways movement. But we are in the overbought territory, but the oscillator is positive. But I wouldn't trust, I wouldn't trust it. But you watch it. That's why for things in times like this, you really have to watch. This is not a safe time to go long and not be able to watch your stop. Not really. So you even got a kind of a bullish crossover there on the oscillator. Not bad. Okay, on the monthly, we don't have a crossover, but we're getting close. The green hasn't overtaken the red on the monthly. So it's in that kind of no man's land where it's like when you're in a sideways move like this, you could talk yourself into either position. You can rationalize this thing either way. Okay, that's why I if I'm trying to talk myself into a bullish position, I'm at least say, okay, at least buy when it's at a oversold, because that would give me a chance to see what's going on with the trend. It's like if we go from overbought to oversold, and even if it doesn't take out this low, if it just takes out this low, that would be enough for me to go, I can't be convincingly for it. Okay. Especially with other factors we know, like the slowdown in the economy and all of that. So
yeah, you're probably not going to see too many changes until after the auto show.
Right.
Because it doesn't end until Sunday. So.
What about Daimler Benz?
What is that?
Yeah, we'll do one more and then we wrap it up.
What is Mercedes?
No, you won't find it under Mercedes. Mercedes is just a brand. The company is Daimler Benz. DAIMLER dash Benz.
You said DIA. Okay.
Yeah, DIAMLER Daimler.
When I put the L in.
I thought it was DBZ.
Could be.
If any of you guys have a browser you can open, you can shoot it. Look, just Google it, and it should come up.
Deutsche Bank. Deutsche Bank has a lot of exposure to China. They've been doing a lot of business. They have a lot of exposure to China, Deutsche Bank.
Oh, it's Daimler AG. DAIMLER AG.
They don't give the like a 3 or 4 letter symbol.
Oh, the
trading symbol.
It's DMLRY.
DMLR.
ADRs. Which kind of makes sense. They never traded on the they never traded on any U.S. exchange until they bought Chrysler when it was DCX.
Okay.
Then when they soul crashed her,
It
obviously.
took this candlestick out. Let's see. I'm looking at the high price, 1478, and this high is 1496. Look at it on the daily. This thing is overbought. Good. Like I say, when I see a move like this, it's got to prove it to me. It's got to come down back to over sold without making a new low. But this, hey, it took this part. Let's see. All right, so you got these lows here. This was the breakout. So you had this high going here, 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 here. Okay. So actually, this would be the high, not here. This would be the peak. It didn't take it out. I'm looking at this low here. All this is like one big sideways channel, it looks like to me. So I'm looking at this high. Take all that out. And it hasn't done it yet. And we're pretty seriously overbought. So this is a short candidate for me too. I would be looking for. This is where I would go down to like 5 minutes and 1 minute chart and look to try to pick a spot to short this. And there's a concept we have called Ireland reversal. That's where the price like gaps. You see this all this sideways action, and the price gaps up. It pops up and it leaves this big gap. Okay, so this gap, a lot of times, not all the time, a lot of times the price will make a gap, and then in this area up here it'll reverse, and they call that an island reversal. So it's like at the end of a move, the stock will blow its top. It exhausts all its energy right here. Basically the money shot. Okay, it's got no more strength left, and it dies. So that's an island reversal. So, but whether this is an island reversal or the beginning of a higher move to come, it's too early to tell. But this thing it's gapping all like crazy. Man, this thing crazy. I don't trust it. Sometimes things, you can have a gap and it can keep going higher. Doesn't necessarily mean it has to reverse. Okay, but I stay with. I think this was that peak we were looking at earlier. Let me see. That's not it. I think it was. I think this was it. So we have not taken this out. So this high right here, we still haven't taken it out. So we'll see. I would also put a trend line here. So I got a trend line here, and I put a horizontal line here. Now, it's got to do something. Bullish would be breaking this line, this horizontal line. I still wouldn't expect it to back on that daily chart, expect it to go to over sold. It would have to prove that to me. And so let's say it flips without making a new high, and it violates this trend line, the support line that I would draw underneath of it, this diagonal line I would draw here, then that would be supportive of my bearish position. But once a trend starts, it's pretty hard to change the direction of a trend once it starts. And things trend for a good while. Now, in this case, this looks like a This is it. This what is encouraging on this monthly. This is a bullish engulfing candlestick, big green candlestick here. So for someone that's trying to play this long, and it's even this stochastic looks good here. The confusing part about trading is when you get into these big downturns like what we are facing right now. The oscillators look weird because the amount of selling pressure that you're getting is greater than normal. So you get stuff like the oscillator will come down here and be oversold and just basically just putter along and go sideways. Well, how do you read this? This is, it's pretty confusing to read. And this is the weekly chart. It's like the press. This is abnormal in terms of the selling pressure. So the oscillators look funny, and that's why you'll see me jump around at different time frames. It's kind of weird. So sometimes the safest thing you can do is just put a trend line on it, or just go back to seeing if it makes a higher high. Simple basic stuff like that, and see what happens. But I'm sticking with the premise that dollar strength causes metals and energy weakness, and the economy is slowing down. So with that bit of fundamental information, understanding of the historical relationship between the dollar and energy and metals, and the slowing economy, putting all that together, I got this. The chart is it's gonna take a lot for me to go bullish on something. It won't just be because I read a news article. It's got to prove it on these charts. I got to see the market come in, put some money in, take out a high, go back down to over, so without making a lower low. If it did that, then I'd get in. I'd put a stop loss right below the new low and take a chance on it. If it didn't work, I wouldn't lose much because I'd have a stop loss in there to protect me. So that would be my view. That's my view of this. I don't like gambling. But yeah, sideways moves, when you're in between highs, peaks, that's always kind of frustrating. You got to set up these if-then scenarios. I'm sure all of you computer programmers, about if-then scenarios. But you say what, Mike?
It's called select statements.
Select statements. Okay, yes, that's what we do in trading as well. Okay, we don't know what the price is going to do. We're looking at the way this is called price action. We're looking at the action of the price. Does it make a higher high or lower low? And we use the oscillator to help us. We're going to trend line up. So, we get as many tools to help us make the decision as possible. And sometimes you're just waiting to see. So you don't just always just jump up and put money out there. You're trying to move the odds in your favor. That's what you're really doing. You're managing risk, and you're trying to move the odds in your favor because you're betting against some real smart people and some real powerful computers and some programs that are smarter than people.
Well, I'll tell you what I was always taught when I first got into business. When you are uncertain, follow the technicians. Those guys are smarter than you, and just ask them, they'll tell you. But when things are uncertain, follow the technicians. Better to be safe than sorry, because those guys, they rarely lose money. They'll never ride the highs as the highs go because they follow their charts and they get out. But you won't lose money. So when you're uncertain, follow the technicians, follow the technical traders.
Yeah, as you get the longer you stay in the technical analysis, you learn to not care whether the price goes up or down. You just become dispassionate about it. You're fighting to get to that point where you're not cheerleading for it. That it's a struggle, but that's what we're trying to do, because we know we can short something. We can make money either direction. So it doesn't really matter to us in terms of when we're trying to make, we're trying to make money. We don't need the stock to only go up to make money. We just have to be right in the direction. That's what we're trying to do. We're just trying to, get the direction right. But it takes a lot to overcome that bias. It's for whatever reason, humans are born with a bias to the upside. We're comfortable betting, going long on something. We feel more confident saying something's going to go up than we do saying something's going to go down. And that's why a lot of people who trade the short side, they make a lot of money when they get real good at it, because they are betting against the herd. But you have to be really, really good to win consistently betting against the herd.
Well, it's funny you say that, because one of the things that's not really talked about, you have to really, for people, you have to look at CNBC. One of the things that's looked at is short positions.
Short
Whenever,
interest.
yes, whenever investors take a large short position, that raises a lot of eyebrows. And whenever you start seeing people liquidating short positions, now they're covering to sell, they're covering to get out, to cover their short positions and liquidate. That also raises eyebrows. So those people, they tend to really know what they're talking about.
Yeah, I was trying to look it up. And anybody, let's see if I can. I want to show y'all this. Hold on now. Just give me a second. I know I lost my screen share. I'm going to. I'm looking something up, and I'm gonna.
We're actually going to close out if it's 12 o'clock.
Okay, but let me just say this: to see the short, is several ways you can. It's called short interest ratio, and what else did I say it was called, Paul? It's another term for it. Short interest ratio. That's one term. I can't think of the other one. Another way you can do it, you could look at like unusual put activity on the options market. And
Correct.
that's where you're seeing real money being put up to bet against a company or an index or something like that. And then you go, what do they know that we don't know? Is, when it's a very large amount of money, that gets everybody's attention, because a lot of times that's people in that industry. They know.
Correct. But the only people who are really aware of that and who watch that are basically people who work in the financial sector and the people who actually do that. So now we're talking, people who basically have to watch CNBC every day.
Right. But that's all I got. Thanks, everybody.
All right. Thank you all for joining us. We'll be back tomorrow night with Black IT Talk, our virtualization, and you all have a good night.